blockchain and financial work. I'm today's moderator and also the representative of HKEBA. I'm Tim. So before the seminar start, let's talk about what this project is about. This material and event is funded by the Professional Service Advancement Support Scheme of the Government of Hong Kong Special Administrative Region. Any opinions, findings, conclusion, or recommendation expressed in this material or any event organized under this project doesn't represent the view of the governments of Hong Kong Special Administrative Region or the vetting committee of the PSS supporting scheme. So the project aim of the PSS project, we aim to equip Hong Kong ICT professionals with knowledge on the latest digital transformation trends and also the implementation strategies. Also, we aim to help ICT professionals on understanding the analysis, applications of cryptographic ledger database technology in decentralized blockchain and financial work. Also, how is application in transactions. So this project and this webinar is mainly about upskill our ICT professionals on the knowledge of the cryptographic ledger database. It's not about investment or any financial advices. Special thanks to all collaboration supporting organizations under PSS for reviewing our materials and also approve that they are suitable for ICT professionals. So before the start of the webinar, let me introduce the background of our association. HKEBA stands for Hong Kong E-Commerce Business Association. We are a non-profit organization, and our mission is to upskill Hong Kong SMEs to catch up with the digital transformation trend. Also, we aim to nurturing a world-class e-commerce community in Hong Kong. Our projects are funded by the Trade and Industry Department and also the Vocational Training Council. At the same time, we have different associations, Chamber of Commerce, enterprises, and also e-commerce platform partners and our supporting organization, such as WTIA, Asia Rate, Hong Kong Management Association, Shopify, and GoJoy Travel, etc. At HKEBA, we have a wide range of offerings for corporate and individuals. We run a lot of local events. On the PowerPoint slide, you can see we run a regular seminar. We share the latest information, some insightful information related to some marketing automation tools or some other innovation technology, e-commerce platform related seminar. On last few months, we invite Ricardo and also Adobe representative to share with us this kind of technology. Also, we have seminar related to the cross-border marketing. We have had an event with Swire and also Salesforce on it. Other than seminar event, we have on-site tour and also regular networking event for our corporate members. You can see we brought our members to Airport Authority and also Hospital Authority to check out how this organization apply the latest technology in their daily operations. And also we hope to connect talent and specialists in this industry. We hope they can share their latest exploration in this industry, and also they can get connected during this networking dinner. So before COVID, we also held a lot of overseas delegation tours. We brought our corporate members to overseas country, South Asia country like Vietnam, Taiwan, Thailand, etc. We will check out their local market technology and also their market trend. We also provide you with a lot of useful tips and articles. You can check out some of the tips of setting up an e-commerce platform or the latest information related to the industry innovation technology. We also have a lot of industry professionals and industry experts. They will provide us some advices, and also throughout the interview, we will ask them about their experiences sharing in this industry. We will also share our partners' events, some of the iconic events within this industry. We hope to make the industry together better. So other than the event services and also the blog content of our website, if you're looking for digital transformation opportunities for business development, you can contact our employees, you can contact our staffs through the website, and our professionals will contact you very soon. At the same time, we also provide a series of training scoop related to ICT related topics and also e-commerce related topics. You can see we provide different courses ranging from e-commerce, digital marketing, CRM, coding and development, marketing automation, data science, cybersecurity, and also cloud application. So if your staff or your corporate eager to upskill their digital skills, you can try to reach out us to have a look at our training courses. So after such an introduction of HKEVA, please feel free to scan the QR code. You can follow us on the social media, or you can inquiry us through sending email to the info@hkeva.org, or you might subscribe to our monthly newsletter. We will update all the subscribers of the market trend monthly, especially on our events and also our webinars. So we'll have around 1 minute for you guys to scan the QR code and also following and subscribe our pages. Okay, let's back to the webinar. So before the start of the webinar, once again, we want to talk about the objective of the whole project. We hope to empowering Hong Kong's information and communication technology service through sharing the latest digital transformation trends and the implementation strategies by enhancing the standard and external competitiveness of Hong Kong information and communication technology, ICT professional services by updating ICT professionals on the latest trend and technologies in artificial intelligence, extended reality, and blockchain technology. So this webinar, once again, I have to reinforce the concepts that we are improving your knowledge on the cryptographic ledger database, but not on the financial advisors or investment advisors. So I will now talk about the rundowns of today's events. So for part 1 workshop, will be at 12:25. We will learn about how trading and investment in the decentralized finance, DeFi, system works. You will learn about what an automated market maker is and study the price movement and different bond curves of AMM trading under various scenarios. Also, how the crypto user leverage profit and take advantage with the skills of front running, back running, and minor extractable values, MEV. And what would be the risks or opportunities you may encounter during the trading process. And there will be a 10 minutes break between each sections. For the part 2 workshops, we will start at 1:35 p.m. We will learn about the development on one of the newest blockchain platforms, Solana. It is an open source and decentralized, and also a consensus is achieved using proof of stake and also proof of history. Some say that Solana even has a potential in the long run to rival and compete with Ethereum. This section, we will try to discover more on this topic. And also our guest speaker will provide a coding demo section So if you are interested about Solana and also you want to tap on topics of how to coding under such environment, you have to stay focused in these sections. For the part 3 workshops, we'll get to know more about what the DLT that enterprises are using nowadays, what are its characteristics, and how they are being adopted in different finance system and activities. For the part 4 workshops, we'll learn about how a blockchain framework at crypto.com is used to make transaction and reversals. We'll walk you through the system architecture and deep dive into transitions. We'll also cover topics of on-chain sequences. There will be a Q&A, also a networking breakout sections after each speaker's section. If you have any questions related to the content of the workshops, please enter it in the Q&A button. Our colleague will gather this kind of questions, and during the Q&A section, our guests will answer it one by one. And the chat room function will be enabled during the breakout section. So come check and get to know our speaker through the chat room functions. Also, after these 4 workshops, we will have a short summarize what we try to offer you today, what knowledge you have to take away after this webinar. And also please help us to fill the feedback survey. If you have any comments related to the webinar content and arrangement, please let us know in the survey. Your opinion helps us improve the quality of the upcoming events. So we expect you to learn in this webinar what is Cryptographic Ledger Database, analyze an application of it under the decentralized finance, what is AMM and bond curve we mentioned before, major DeFi protocols, what is MEV, what are the common ways to get lost in dark forest, how you can prevent them, especially when you are doing front run or doing sandwich action, different types of transaction examples, how to protect yourself, some of the real case sharing from our speakers, also the payments and refunds transaction on the blockchain network. How can you do the system architecture and also deep dive in the payment transaction flow, on-chain payment sequences, and also protocol development related to the Solana network. So we'll have a brief introduction of our 4 speakers today, so we can learn about their backgrounds. We have Kendrick from DFX Finance, Sid from CM Intelligence Technology, Tony from CryptoBlock, and Jonah from Crypto.com. So our first speaker, Kendrick, has worked in the blockchain spaces for many years and currently works at DFX Finance in Decentralized Finance as Chief Technological Officer. He was a former software engineer at the leading blockchain company organised and blockchain developers at the Ethereum Foundation and Zcash. So you can tell he has a rich working experiences in different leading blockchain company and also over 5 years experiences in this field. For our second speaker, Sid is a professional IT specialist with over 5 years experiences in providing programming, publicly cryptographic solutions. He holds experiences as a former core developer at Digibyte Payment Network, software engineer at Snippy Media, and senior technology specialist at Infinium One. They are all high-level technology companies. And he's now currently working at CM Intelligence Technology, a leading technology company in Thailand. Our first speaker, Tony, has worked in CryptoBlock for more than 3 years. He's responsible for engineering financial technology products for the company. So a little background about CryptoBlock, if you are not familiar. It is a blockchain and a DLT solution provider founded in 2017, offering DLT software development and also deployment and operation support. They are specialized in building enterprise-grade DLT systems and applications with a focus on commercial trade, insurance technology, and real estate development industries. For our final speaker, Jonas, His passion is to solve customer problems with cutting-edge technology. He possesses a wealth of multidisciplinary experiences as an entrepreneur, software engineer, and former commercial lawyer. So currently, he is a SVP, Senior Vice President of Product at Crypto.com, where he's responsible for building and leading the product team to scale up and optimize the product portfolio spending. They got multiple business lines, both direct to consumers and B2B. So we're entering the part one of our workshops. We will have an introduction to the topics, a case sharing, explaining the mechanism of different price demand supply shifting between two exchanges related to AMM bond curve, MEV. And our speaker will taught you what are the common ways to protect yourself in the dark forest, and we'll follow by Q&A and networking section. So don't hesitate to drop your question, and also you can try to get to know our speaker during the networking section. So when we talk about crypto and decentralized finance, we will ask about what's the differences, especially for the currency exchange and trading. Some people talk about that trading in the DeFi is a whole different world. You don't have to have a middleman like a bank. Some even say that DeFi in itself is like a bank, but you can participate in being the bank. In the same way, the bank make money by offering currency exchanges and lending services, and you can participate in DeFi and earn money just as the bank do. So in this workshops, we will discover more about how transaction and exchange can be achieved without the middleman role the bank we mentioned. So how does the demand supply of the pool work in DeFi system? On the slide, you can see there are so many terms like price impact, the gas fee, the liquidity provider fee. So what are these kind of terms indicate? And what are the risks and opportunity you may encounter during the trading process? So let us to introduce our first speaker, Kendrick, Chief Technology Officer from DFX Finance, to share with us. Okay, Kendrick, you can do your part now.
Can you hear me? This will stop. All right. All right, can everyone hear me? Is it writing on the screen? Let me just double check. All right. Just making sure before I go on a long tangent.
Yes, Kendrick, we can hear you.
Okay, perfect. And can you guys see the screen? Is that all good?
Can you open your cam? So
oh, is my cam?
Yeah.
Oh, is my webcam not open?
Oh, okay.
Oh, no, I'm just asking about the slideshow. Can you guys see it? Hello? All right, I'll just assume things are going good. Okay, welcome to Tales from MEV Land. And as previously mentioned, MEV stands for minor extractable value. If you don't really know what those terms mean, don't worry. We'll kind of walk you through step by step what that actually means, what it entails, and how you can either exploit it or how you can kind of not get exploited by it. So a little bit about me is that I'm a software engineer by trade, and I also have a cat with an Instagram at mr.miso.oz. There he is on the right playing mahjong. If you want to follow him on Instagram, we're always happy for more followers. We want to get some sponsorship. This cat food is getting expensive, so please at mr.miso.oz. this will be what the talk content will be about briefly. So I'm not sure the technicalities, how technical the audience is. So I'll probably do an overview of kind of like Ethereum and Bitcoin, how they differ, and I'll go through dApps or decentralized applications. But specifically, the one dApp I want to talk about is the automated market makers. A brief kind of overview on how they operate and how they get exploited. Then I'll go into mine extractable value, or MEV, for short, the overview of MEVs and what kind of dangerous situations you might put yourself in if you are looking to run an MEV strategy. So that's going to be the talk content. So, and well, people often like to compare Ethereum with Bitcoin. So like the number one question that I get said, what is Ethereum? Like, how does it differ from Bitcoin? I mean, aren't they just both cryptocurrencies that, you know, pollute the environment, you consume a bunch of electricity to compute all these useless numbers? Like, aren't they very useless? But how, yes and no, but essentially Bitcoin and Ethereum at its core are both cryptographic ledgers. And what I mean by that is that they are a database that everyone agrees on. So everyone agrees on the content of the database, and no one controls the database. So everyone can either read or write from the database, and everyone kind of agrees on the contents of the database, cryptographic ledger. Now, this is really important because before this, databases are permissioned. And what that means is that you kind of need a party to kind of verify that this content is valid, but now you have this openly accessible database that anyone can read or write to using the right tools. But not all databases are created equal. The Bitcoin database can be thought of as a calculator. It's very like an old school calculator. It's very application specific. It only does one thing, compute some numbers, and it does it really well, but it's very limiting. For example, if you want to build an options protocol, you want to build an automated market maker, or you want to build some kind of social media app, it's incredibly hard to do it on Bitcoin, simply given how limited the computational power and more like the opcodes, or more specifically how primitive Bitcoin is. Whereas Ethereum can be thought of as a smartphone. You have this general purpose database where you can kind of execute or kind of perform arbitrary computation. You have like applications, like social media applications. You have applications that does numbers like your calculator. You can watch videos, and stuff like that, like very general purpose. It's not very application specific. So Ethereum empowers developers to kind of create any application they can dream of. In fact, Ethereum is Turing complete. So you can, whatever you want to build on that you can build on a PC, you can technically build it on Ethereum, though it might be a little bit more expensive, and it might take a lot more, it might be a lot more slower. So if you're doing something computationally expensive, probably don't do it there. But for simple stuff that requires some level of consensus or some level of decentralization, Ethereum is kind of perfect for your kind of the perfect tool. Now, something I want to hammer on about these databases is this concept called state transitions. So, for example, your database might go from content A to content B, and that's like a state transition. And now more concretely, an example would be, let's say ABC has 10 Bitcoin and A sends 10 Bitcoin to B. Now the database has a state transition from A to B, from 1 to 2, from a state transition from state 1 to state 2. Now in the database, A has 0 Bitcoins, but B has 20 Bitcoins, and C still has 10 Bitcoins. And then if you do another state transition, for example, I'm going to send 5 Bitcoins from B to C. then the database will kind of register this as, okay, now B, deduct 5 Bitcoins from B and send the 5 Bitcoins to A. Now A has 0 Bitcoins, B has 15, and C has 15. So this concept of state transition, there is this concept of state transitions in databases. Something I would also like to emphasize on is that these state transitions, the order of which matters. So for example, if B only has 10 Bitcoins, it cannot send 20 Bitcoins until it's received 10 Bitcoin, at least 10 Bitcoins. So you can't send 20, then receive 10, but you can send 10, then, sorry, you can receive 10, then send 20. So the ordering of these transactions matter. And oftentimes, if you're wondering what the genesis state over there is that oftentimes Bitcoin and Ethereum have this initial state, which they call the genesis state, which is basically in the very beginning of this database, like how does it look like? In Bitcoin's case, every single person's wallet balance is 0. But for Ethereum's case, because they did a pre-sale, so it kind of populated the state or the wallet balances of these pre-sale buyers with a bunch of ETH in the genesis state, in the very initial state. So yeah, but this is the concept of state transitions. You have a bunch of transactions, you change the database's state from state A to state B based on what kind of transactions you're doing, hence state transitions. And now I want to talk a little bit more about decentralized applications. Remember how I mentioned that Bitcoin is like this very application-specific database, whereas Ethereum is more general purpose. So you have this concept of decentralized apps that you can kind of run on Ethereum. Essentially, there are applications that live on Ethereum. You can run code and kind of execute code within the Ethereum virtual machine, as I like to call it. So essentially, you can have applications. And for this talk specifically, since there's so many applications, you have like, again, options protocols, you have like betting protocols, you have decentralized compute. I don't know how that works, but the one application that I really want to kind of go a little bit into depth today would be the AMMs, or automated market makers. So I guess AMM, it's quite a bit of a mouthful. So what is an AMM? An AMM, automated market maker, just before we can even go to understand what an automated market maker is, we kind of have to understand what a market maker is. In traditional finance, a market maker is simply someone who kind of takes the orders between participants on an exchange and kind of executes it and try and profit off it. So for example, if there's someone willing to buy ETH for $1.01, and there's someone who's willing to sell ETH for $1, this market maker will see that those two separate orders, and it would kind of, all right, I'll buy 1 ETH from this guy and I'll sell it to that guy and I'll profit that 1 cent. That's essentially what a market maker is. In bigger exchanges or hedge funds, usually this isn't a person doing it, it's a robot that kind of crunches a bunch of numbers and tries and perform these buy and sell orders. Now, an automated market maker, in the sense, I guess this is a terrible emoji. It shouldn't be a robot, but essentially it should be no one. It shouldn't be a robot. It shouldn't be a person. It should just be code or a protocol that people interact with. So an automated market maker. This market is automatically made, hence the name AMM. And one of the most popular AMMs on Ethereum is this protocol called Uniswap. And there's a bunch of technical terms like bonding curves and how they work, X, Y equals K. But we'll try and cover cover them all within this session. In essence, this is what an automated market maker is. It's just a function called x times y equals k, where x and y are the quantity of assets, for example, asset A or asset B in the system or contract in Ethereum's case, and k is just some constant that is defined or kind of initialized when this market was created. And as you can see here on the y-axis, there is a that represents the quantity of B tokens in the contract. On the x-axis, that represents the quantity of A tokens in the contract. And if I wanted to say buy tokens, A tokens against this market, I would basically, you can do a little math formula to calculate, all right, how much A tokens I spend is the x-axis, and how much B tokens I gain is on the y-axis. So, and this pushes the point in space from the old position to the new position. So that's like now the new price point. Now, I know this sounds very hand wavy and very vague. Oh, I think the slides accidentally got reordered a little bit. This sounds a bit hand wavy and vague. So I'll do a demo later after this slide. But something you need to understand is that notice how there's an old position and a new position. So the point on the curve is now different. And so the gradient or like the ratios between the two now changes. And the point on the curve actually determines the spot price of B against A or A against B, depending on which way you want to look at it. And notice how it shifts. It shifts from the curve from point A to point B. And now this kind of brings into this concept of slippage, which essentially is the price delta between the starting point and the ending point. And in this case, it will be the price delta, the delta between these 2 points. That's a concept known as slippage. Obviously, because Ethereum is a very slow machine, this is kind of like a band-aid solution. Order books are still superior. They offer more exact amounts, but I think for your everyday trader or your everyday user who just wants to get in and out, I want to trade coin A to coin B, like I think this is good enough for the general population. But yeah, slippage does happen, and if you want to read this very long paragraph, it's essentially the price difference. And now I will go into Now this is really cool tool made by Dan from Paradigm. It's just a Uniswap math or like an AMM bonding curve math calculator. And recall on the x-axis, that's like how much quantity we want to buy. On the y-axis is how much we'll get. And in this case, L being 100 is kind of, you can think of it as the liquidity depth, or how much the quantity of tokens within the contract. So for example, the concept of slippage will come very shortly. So for example, if I wanted to sell 100x, I would get approximately 133x right now at this current liquidity depth and at this current price. But you can see the execution price is 1.336, meaning for every x I sell, I get 1.336y, which is it looks all right, but the starting price is actually 4. So if I only sold like a very minuscule amount of x at the very beginning, I will get 4y. And this idea can be further seen as I increase my purchasing amount of y. So now my execution price gets worse and worse and worse as the quantities of x that I would like to sell increases. So I get less y for more x. However, this concept of slippage kind of diminishes as your liquidity increases, and in this case, it will be the quantity of the tokens in the contract. So for example, if I increase my L to a bigger amount, you can see the curve actually gets flatter over time. And that's good, because the flatter the curve is, the lesser the change in gradient there is between points. And now we can see that for about our execution price now remains roughly the same. Oh, well, it's not roughly the same, but it's way better than before. So now for about 100x, let's see, 100x, we get 1.21. And if we increase it, we still get roughly 1. Oh, I see a chat pop up. Yes, that's the link. Yeah, if you increase it, the execution price doesn't diminish that significantly. So that's what happens when there's more, when the liquidity depth of said token is larger. I'll just let that sink in for a bit while I'll take a sip. But going back to the original point, this is essentially the bonding curve. It's almost like an inverse exponential function, which dictates how much Y you're going to get out, given how much X you can get out. And this is the inverse is also true. So if you give in 134 Y, you will get out 99X. And so the execution price in that case would just be 1 divided by 1.345. So as you can see, it just slowly gets worse over time. And that is the concept of slippage. Yes, so slippage in, out, 50, 100, execution price of 2, roughly 2. But as you increase how much X you want to get out, you get less, the ratio kind of decreases. Now that's an execution price of 1. So that's the concept of, that's a very, very, very high level overview of bonding curves and the concept of slippage. Before I continue, I would kind of like to do a little refresher on this concept of Ethereum and AMMs. And Ethereum is this global database, or kind of this global application database that allows you to kind of run code or deploy code and mutate some state or some kind of the contents of a particular application. And this particular application can be, for example, the quantity of tokens of B in a contract, or the quantity of A tokens in a contract. And the application can be something like a math formula, or in this case, a bonding curve. Because it's just simple math, it's XY equals K. This formula can be executed quite quickly on Ethereum, and it's a really good compromise for order books, which require a lot of constant care and attention, since they are kind of, each position is unique. But now with a bonding curve, each trade, buy or sell position is almost, I would say, fungible in a sense. And AMMs, automatic market makers, are basically code-based exchanges that allows you to swap assets, for example, token A to token B, without necessarily going through a third-party entity. And we want to go back to this concept of state transitions, where order matters. For example, the transition from the genesis state to state 1 is different if we did transaction, if we went from genesis to state 2 to state 1. The order will be different. So order matters. Now, recall the concept of slippage, and now apply it to this state transition order. So what would happen if there was 2 buy orders happening between each state on Ethereum? What would happen is it would push up, if let's say both of them are buying token X, the token Y with X, it would push up the price of token X twice. And I can go back to the calculator to kind of give you a more better rundown. So for example, if someone bought in 100X tokens, the current execution price be 1.322. But let's say that's buy order 1. But let's say someone else went in after this guy bought you would be starting at execution price 1.322, not execution price 3.96. So that means the guy who went in first got the better price execution. But keep in mind, like these transactions are public on the Ethereum network. What would happen if I, as a predatorial person, sees that there's two buy orders or even a single big buy order for, let's say, quantity for token A? And then what can I do with that information? Well, I can do a very big buy order, push up the price incredibly, and make them and let them have a terrible execution price. That's what I could do if I was a predatorial bot or a predator on the Ethereum mempool. So we've just talked about slippage, we talked about state transitions, we talked about AMAMs, we talked about bonding curves. Now that kind of leads us nicely into this concept of front running. So front running in funny money land is this concept of kind of placing the hello. Okay. Sorry, I think my microphone just dropped out. Oh, okay, it's back. But front running is this concept of putting a transaction before everyone else's transaction. Hence the name front running. You're putting it in front of other people. And in our case, and this is done with the intention of kind of exploiting or kind of profiting from the transactions that are occurring after you. And in our case, it would be this giant buy order to push up the execution price. This would be our front run to push up the execution price. So the buy order that occurs after gets a very, very bad execution price. So it's essentially, so front running is just it's just placing a transaction with the knowledge of a future transaction. So that's the crucial bit. You cannot front run a transaction that doesn't exist. So what happens if you push up the price and the other guy pushes the price even higher? Hello. And now you can kind of push it back down. And here is that is actually a term called sandwiching. And this is a real life example of a user who just wanted to trade his Ethereum for Shiba tokens, and he got attacked on the Ethereum network. And you can actually see this all play out on Ethereum block 13503623. If you're very curious, you can go to Etherscan, go to this block and check that out. But I'll relay the story here. This is our junior trader, our 0x789, who wanted to trade 200 WETH, which at the time this screenshot was taken was worth roughly $873,000, and he wanted to trade it all for Shiba tokens. What happened was that a predatorial bot discovered this transaction discovered this transaction in the mempool, and sorry, my headphones just kind of going a bit off. But there's a bot that kind of came in, pushed the price up, allowed the users to buy it, and then basically sold it on the way down. And in total, he went in with 341 WETH, and he exited with 356.87 WETH. So the total value extracted simply from this one transaction is approximately 15.4 ETH, or at the time of calculating this, it was roughly $67,000 US just from one trade. So that's the total value extracted, but it's not how much the predatorial bot actually profited, because he had to actually bribe the miner 14.744 ETH. So in fact, his total profits was only 0.75 ETH, or roughly $3,225 US in one trade. And this is done in seconds. This all happens user sends out this transaction. Some bot that's listening to the mempool, it finds it. It does a bunch of computation, a bunch of calculations. All right, at what point should I push the price up to, and then it just resells it. So that's a real life example, and in fact, we can even see it live. We'll go and check this transaction out live right now, if it loads. So this is the user's transaction. Oops. And we can see that it is actually a private transaction labeled by Etherscan. And we can see him transferring about 200 Ether on Shiba Inu Shiba swap. And he wants to swap about 200 ETH for some Shiba Inu tokens. And in fact, we can see the present day price on the day he traded, he lost about $240,000. I don't know if you guys can see, so I'll try and zoom in a little. So on the day he traded, just on this one trade alone, this guy lost about $245,000 because he didn't set the correct slippage, which is tragic, because if he just held ETH instead, he would have $900,000 instead of $376,000 worth of Shiba Inu tokens. Now he might have traded that for a profit in the future, but I haven't really tracked it. But this happened 36 days ago, and 36 days and 15 minutes ago. And in fact, we can even go and kind of check out his transaction where he says, I want to swap exactly about 200 ETH for some amount of Shiba Inu tokens. So this is hex encoded, and we can see, we can kind of convert this hex to the converter. We can kind of see at what price was he willing to accept. And so he was willing to accept about this big number, 9084148. And as you can see here, that's how much he got. Exactly, almost exactly to the dot, the minimum amount that he was willing to accept as a loss. And so you can see like these bots, these predatory bots are very sophisticated. They know, they kind of know what your tolerance limit is, and they would push it to the max. Because again, going back to the Uniswap example, like if he buys any more, then the execution price drops by just that much. And if that minimum amount required here isn't reached, this whole transaction fails, and the sandwich attacker just lost some gas. Whereas this transaction would also fail, but he wouldn't get such a shitty price executed. So this just goes to show you how sophisticated these bots can be. Like they just calculate the exact amount, or like the exact way sometimes, and then they kind of push you to that price point where you're willing to buy, and then they sell it down. So how does, so this is probably how it works. Buy, sandwich bot, another buy from the user, and now the sandwich bot sells and just profits that tiny bit. But in this case, it wasn't tiny. It was roughly $67,000 value extracted to profit $3,000. So in the end, the miner wins here, but the miner wins here. But I just find it really sad that this user was willing to spend upwards of a few $100,000, $60,000+ just to profit that $3,000 from this trade. So I just noticed someone asking a question. I'll go into that a bit more detail later. But so that's the concept of sandwiching. There's also this concept of backrunning, where instead of being more predatorial, now you're trading between exchanges after someone changes the price from exchange A. For example, if I did a big swap of let's say Shiba and ETH on exchange A, that changes the price. Now that pricing information on exchange A is now different from the pricing information on exchange B. So there's like an imbalance after the trade. In what you do in back running is that, all right, there's now a price delta within this trade. How much should I sell on this exchange and how much I should buy on this exchange to kind of push that price information back to this, I guess, point, back to a local point. And this is less predatorial. This is, in fact, I would call it more delta neutral, because you're not profiting off the expense of someone, but in fact doing the community a service, because now you're kind of balancing out the trade information. You're extracting asymmetric information from one exchange and kind of just making it more symmetrical across all exchanges. So back running would be, if you would like to venture into MEV land, is what I would recommend, simply because it's not predatorial. And in fact, I think Ethermine, one of the bigger mining hubs, has explicitly said that they will block sandwich transactions if you try and run these MEV strategies with them. So it's very frowned upon these days. But yeah, back running. So in this case, what happened is you have an opportunity transaction. So some guy is trying to swap ETH for some token on Uniswap V2, but because the amount he bought was quite substantial, this created an opportunity for someone to say, all right, there's now a pricing delta between Uniswap V2 and some other exchange. I'm going to neutralize them. And we'll kind of dive into more detail on these opportunity transactions. So this would be the opportunity TX, where this guy was 0x83009 was swapping 2 ETH, roughly $8,000 for this thing called P-Safe Moon or something. I think it's P-Safe Moon, I'm not too sure. So for 2 ETH, he got about 1.38 for something, or $7,000 worth of P-Safe Moon. Cool. But what he didn't know was that he actually created an arbitrage opportunity between Uniswap V2 and another exchange, I presume is by the same token, called SafeSwap. And so now there's a pricing delta between SafeSwap and Uniswap V2. Oh, sorry, the Uniswap V2 is pricing PSwap higher and SafeSwap is pricing it lower. So what he did was he basically bought on SafeSwap, sold on Uniswap, and now evened out the pricing delta. And we can kind of check this out in the example where he started with 1.821 ETH, and he ended up with 2.11 ETH. So that's still pretty good profit, you know. It's like, sorry, revenue, still pretty good revenue, you know. It's about $1,268 just pushing some numbers between some exchanges. That's pretty good. But that's not exactly the case, because we can see here that he actually paid a 0.24467 blah 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 bribe to the miner. So you have to pay these bribes if you're using some tool like Flashbots or going through like a Flashbots inspired RPC URL, because if you don't, then the miner simply would not include your transaction in. So you have to pay these bribes. And something to elaborate on, because everyone sees these transactions, everyone knows the same opportunity exists, but there can only be one winner. So how the miner determines who wins is how much you bribe, divided by, I think it's how much gas you use. So these opportunities become a competition between how efficient your contract is, how good your calculation is, and how much you're willing to bribe. And so anyway, in this case, our delta neutral bot, our neutral bot profited just about $215 from this trade. But keep in mind, like these transactions, they happen almost every block, like at $200, sometimes $3, sometimes $1, sometimes 30 cents. But these happens every other block, and we can kind of check this out on the this really cool tool called Flashbots Bundle Explorer, and we can just do a quick refresh, and we'll see at the current block number there is roughly 2 bundles happening that just happened. And if we click the block, we can see in real time it happened a minute ago, and we can kind of see what kind of arbitrage opportunity happened. Oh, so this seems big. So some guy, I think, was selling Spell, which is another token, on some exchange. Some guy was selling, I don't know, I can't really, oh, no, this guy just did a private transaction. So it's not really an arbitrage. Let's try and find something that is arbitrage-esque. So this is a example of a sandwich tag. This guy, this is the victim. He, if I'm not correct, this is 0x3f95, 0x, no. Kind of hard to see sometimes. I think, oh yeah, it is. So that's the original trade. This guy wanted to swap USD for some rune on 1-inch powder. So he did some swaps on rune on Uniswap v3, Uniswap v2, and SushiSwap. But this bot is actually really smart, as you can see. So it even found it through an aggregator. And it basically said, all right, I'm going to push the price really, really high up onto Uniswap v2. And I'm going to put in about 3.586 WEF. And then I'm going to push the price up of rune on this exchange. And then this guy bought it, pushing the price even higher. And then this bot sold all the rune he had and made a profit. So it's like the delta between 3.6725 and 3.85. Obviously, there's some bribing involved with the transaction fees and gas, but I won't be calculating it. But you can see that it's approximately, like, let's say $30, just roughly glancing just from this trade. And this happens almost every other block. If we just, and this happened, 3 minutes ago. If we just refresh it again, we'll see a bunch of different transactions. So this sort of MEV strategy, it's very competitive as well, something I would like to mention. So if you're not, so if you do want to venture into this, be prepared to put in some time. Yeah. So yeah, this guy profited $600, $200 or something. So not a bad start to the day. And something else I would also like to kind of briefly touch upon is this concept of the mempool. So before, the mempool is essentially where all these pending transactions kind of get chunked into before the miner determines the order of these transactions. So in our previous examples, the users might send out their trade orders. For example, the WEF to Shiba trade to the mempool. The miners will, back in the days, not these days, but back in the days, how the miner would order these transactions is like, all right, you're willing to pay me $2 to get this transaction done, and everyone else is only willing to pay me $1 to get this transaction, to get their transaction done. So I'll put yours at the first as the first transaction, and then I'll kind of put the others through. But as you've seen in the other example, these days, the mining fee, or how much you pay in ETH, or how much in Bitcoin's case, how much you pay in Bitcoin, isn't necessarily the maximum extractable value, the maximum extractable value from the transaction. Because if you, as the miner, exploit that order of transactions, for example, push up the price of Shiba tokens and then sell it later, you will actually get a bigger profit. So these days, the mempool isn't a really safe space, and we'll go into a little bit more detail on how you can kind of protect yourself while trading, or just if you're interested in running these MEV bots. So yeah, if you want to run an MEV bot, you listen to the mempool. So like the transactions that are pending, or this guy wants to swap 200 WEF for some Shiba tokens. All right, how can I? So I listen to it. It's okay. Is it swapping on SushiSwap? Is it swapping on ShibaSwap? Okay. How can I make it profitable? Do I do a background? Do I sandwich it? Do I trade on sexes? If you would like to bundle up, if you want to break your transaction and make it non-atomic, that's where all the juicy arbs are. But for our cases, we'll just assume everything's atomic, because that's, as a developer, that's what I would think most developers prefer. Atomic, almost riskless arbitrage. and then you just kind of bundle up your transaction and send it over to Flashbots or some Flashbots related miner. So that's what you would do. And in fact, the prerequisites for these are quite interesting, because the most substantial cost for me anyway is deploying the smart contracts, and also bugs in your contract. If you, let's say you had a bug in your contract, almost be prepared to lose all your profits or even your investments just because you have a bug. But smart contracts, the deployment cost on Ethereum these days is absolutely insane. It can cost upwards of $500 per test, because you would like to test your bots in the real adversarial environment. You don't really, I personally don't really find it worthwhile to test it in the testnet environments, because it's hard to simulate and it's hard to replicate these real life encounters. Like it just feels very sterile, like you're in a lab and you don't really get exposure to the real world. So smart contracts, the prerequisites, and if you want to listen to the mempool, you kind of need an Ethereum node, so you can either run it in the cloud, or I think Hong Kong has really good Wi-Fi, fiber really quick, so you could probably even run it on-prem in Hong Kong. And algorithms calculate profitability. That these are some of the secret sources, but I guess I'll just leak a little bit of alpha here. It's just binary search if you guys are interested, for the sandwiching, golden section search if you're interested in the back running. I'm not gonna say anything more than that. And as well, like servers to kind of host your bot. So I would say if you're really interested in running your own MEV bot and or strategy, you're looking at maybe roughly kind of like 3 to 5 ETH to start off, simply like 1 or 2 ETH to deploy the contracts, and then maybe like a couple ETH for gas costs. But the ROI is really good if you can break into the competitive space. The ROI is pretty good. The long tail stuff, or the less popular ones, there are a lot of other opportunities, but you have to search for it. And the cliff for profitability for these popular arbitrage opportunities is also quite interesting. It's almost like a cliff. You get nothing for probably the longest period of time, and then once you start hitting, you just start earning, and then you just kind of plateau. So either you earn nothing and you start earning, and then you kind of just plateau, simply because a difference of 5% contract efficiency could mean you getting the arbitrage opportunity and you not getting any opportunities at all. But this is not all sunshine and rainbows. There are actually predators that prey on the predatorial bots. So in this tweet, I don't think I linked it, but if you're curious, you can search out Bud C. Miller. He's kind of like the granddaddy of all of these threads. So the predator becomes the prey. Remember how the sandwich bot in the previous example was exploiting this ordering of transactions to kind of push up the price and then sell it for a little profit. Well, not all bots are created equal. Again, you can, because these tokens are simply a standard, or these tokens can be created by anyone more concretely. So you could technically create what they call a poisonous token to kind of bait the sandwich bots to kind of go after your transactions. And in this case, a sandwich bot got baited to buy 100 F worth of the token. But I think this was in April. So these things were very, very new back then. But I don't think he simulated it well enough and just assumed that he could immediately sell the tokens. But what actually happened was that the token had a piece of code in it saying that, okay, if you are a predator bot that just bought this token, you can't sell. I think it was, you can't sell in the same block, or you can't even sell at all. So what happened was that this owner basically this bot owner basically spent 100 ETH worth of 100 ETH to get this poisonous token, but he wasn't able to sell it. So the poisonous token's owner then managed, because these tokens can be created by anyone and it can be minted freely, he then just sold all his poisonous tokens for for the 100 ETH, and he only paid 0.1 ETH to the miner to kind of bait this bot, which is incredible. 100 ETH, I think in today's price is about 500K, which is ridiculous if you think about it. So sometimes it's poisonous tokens, sometimes it's clumsy developers. And there are instances where contracts or the bots that are being operated on got hacked. So because a lot of these functions allow you to do, let's say, arbitrary trades between exchanges. What you could also do is like, all right, I'm going to trade on this shitty exchange. I'm just going to send these tokens to myself or to someone else. Usually these functions that you call are protected, meaning that if you're not the owner of this contract, you'll get rejected. But I think what happened was that because they were kind of optimizing for gas efficiency, they were trying to get it to as close to bare metal as possible. They forgot about the security aspect of the contract. So they were focusing more on efficiency and forgot about security. So $1 million just because someone's like, all right, my door's open, anyone can grab it. If you know how to open the door, you just twist it. It's pretty trivial. Twist it and you can get $1 million. And someone was like, all right, so it turns out I can just grab it. And so that happened. It's happened multiple times as well. This another example for 200K. And I think the $1 million loss eventually got refunded up to 900K. And the cautionary tale, I guess, the end. But yeah, these things do happen. So if you would like to run these strategies, know the risks. It's not all sunshine and rainbows. So I was told that I needed something to do with e-commerce here, so I'm just going to talk about NFTs. Nothing to do with MVV, but NFTs, I suppose. So NFTs, e-commerce. How do you do? Yes, how does it relate to e-commerce? I guess with NFTs, this is a new way to do e-commerce. With NFTs, you can engage with your super fans. It's exclusive. You can build your community. So this guy called Danny Postma, he's a serial entrepreneur. I guess he's just like a micro startup builder. I think based in Thailand or something. I'm not too sure, but he managed to sell 500 plus Tailwind CSS starter packs. Just think about this keyword, CSS starter packs, overnight for 100K using NFTs. I'm not sure what holding the NFT entitles you to do. I think it allows you to get some kind of one-on-one chat with him, or allows you to kind of own that CSS starter kit. I'm not too sure what it does, but all I know is that he managed to engage with his super fans on this particular thing, and he managed to raise over $100,000 overnight simply by merging NFT and some kind of novel concept. I've seen like other startup entrepreneurs do the same thing, like a meet and greet. Like if you have this NFT and you burn it, I will personally come over to your place. I'll sign something for you. And they kind of just auction out these NFTs. So I guess if you guys are e-commerce people, woohoo, NFTs. I realize this is really shoehorned, but I couldn't find a way to kind of let it flow nicely. I think that's it. I think I'm out of time as well. There's like 7 minutes remaining. So yeah, MEV, any questions from the crowd? Feel free to ping me.
Yeah, thank you so much for Kendrick's present. I learned a lot, very informative. Can anyone see my screen now? Right. Okay. So now is the Q&A sections. I hope all the online audience enjoyed the amazing presentation from Kendrick. So I think Kendrick can see there's some questions in the Q&A zone right now. So you can answer it one by one. So the first question for Kendrick is, how do you get the liquidity of the trading pair?
So the liquidity of the trading pair is just how much tokens are in the contract. I would share my screen, but I can't. But essentially, what
you can just. Do you want?
Oh, I can share. Yeah, oh yeah. I'll just share my screen. Yep. All right. All right. So I guess I'm back. Okay. So if you want to get the liquidity, it's actually not too hard. The L is a constant ratio that's set, but that doesn't determine the actual liquidity depth. So what you can do is actually you can go to the actual contract. In this case, it would be Uniswap V2, and you can see the token balances. So I know like it's always should be roughly 1-to-1. So I know there's like $1 million in Rune here and $1 million in ETH here. So that's your liquidity depth. And I don't think I can do it on this contract. Yeah, I can't. But that's essentially your liquidity depth. And another question is the WEF sheep trade.
I think they are interested about your examples of the Ethereum and the SHIB transactions.
So there's two ways how you can avoid getting sandwiched. So sandwiching is probably the one you want to get avoided, because if you get backrun, that's usually fine, because that just means that you perform that trade poorly. So I guess sandwiching would be the one you would like to avoid. I think there's this Flashbots RPC URL that you can add. Yes, you can now add. It's called a Flashbots Protect RPC. So now instead of going through, say, a public Ethereum provider like Infura, you can go through Flashbots, which is like this permissioned URL. And essentially what happens is they hide you from the mempool. They hide you from the mempool for now until your transaction gets through. Now, in most cases, this is fine. But if you can't access the Flashbots URL and you want to trade, what I would suggest is like if you go to Uniswap or something.org, if you go to the app, you can set a really low slippage. Like here, set your slippage tolerance. Don't click auto, click like 0.5%. Your trade might fail. It might even tell you it will fail. Then you just slowly bump it up. Like the max I would ever set is 2% if I'm trading something very illiquid. So it even warns you that your trade might be front run if your slippage is too high. So just keep that in mind. Just change the slippage tolerance or use the Flashbots Protect RPC URL, which is probably the easiest.
Okay, I think we can answer like 2 more questions and we will move on to the networking sections, I think. So what about answer this one? So what are the scenarios where AMM lose money, and what's the relationship between AMM and LP?
This is a long one, but AMM doesn't really lose money. AMM is just a trading platform. The LP or the liquidity providers don't, I mean, depending on how you want to call lose money, it's a bit, depends on what kind of terminology you're using. But in the example that I provide with the Shiba trade, none of the LPs lost money. It was the trader that lost money. The LPs actually got a better deal because there was more trade volume happening, and so they got more fees from the trade. So the LPs actually benefited from that, but the trader lost money. But if you want to go into detail of how impermanent loss operates, I think this is a bit outside the scope of this topic, and you're better off Googling impermanent loss. And there's a lot of like math formulas that I probably am terrible at explaining.
Yeah, I think if the audience is interested about these topics, just drop an email to us. So I will refer you an email and inquiries.
Oh yeah, I have my Twitter, so at Kendrick_TN if you want to message me. I guess, how often do these trades happen? A couple of seconds. It's not, so the thing that you have to keep in mind is these transactions are, how often do these trades happen? A couple of seconds and make that much. How many people working on this, and what are barriers of entry? So barriers of entry, I would start with that, is that can you code? Can you do math? I think ideally you have a trader friend, because you need to know the formulas. Like knowing GSS, like golden section search and binary search, isn't enough. Like you need someone who's worked in an industry. How do you calculate the optimal amounts to kind of put in? Because if you put in too much, you actually get less out. So you need to calculate. It's almost like a normal distribution. You have to calculate the exact amount to put in and how much you get out. That's the barriers of entry. I forgot what was the other, how often do these trades happen? Let's check out the Flashbots. Let's check out the real-time example again. let's see, it happens almost every other block. I would say 60% of the time, simply because that's the hashing rate that all these collusion, these miners have. I would say it happens like 60% of the block, or 60% of the time. It doesn't happen in seconds. It happens atomically. And when I say atomically, I mean that it happens, either happens or it doesn't, and it happens in an instant. You can, if you're curious, you can check out this Flashbots Bundle Explorer and kind of go through each transaction.
Interesting to explore. Okay,
and
about the final question.
Oh,
he said
so
he's very interested in the impermanent loss. So can you?
Oh, impermanent. It's basically the price. Because as a liquidity provider on Uniswap, V2, not V3. In fact, V3 is worse for impermanent loss because range is a lot smaller. For V2, what happens is that let's say you start off with 250 WEF and you want to be a liquidity provider for Shiba, you would sell 125 ETH and you would get, let's say, 125 Shiba, and now you would be a liquidity provider. So 125 and 125. But as the price changes, so does the ratio, as mentioned, of the tokens in the pool change. So let's say the price of Shiba rose, or sorry, the price of ETH rose and the price of Shiba tanked. When you remove liquidity from the pool, what you would get is actually you get less ETH and more Shiba because the price of ETH increased. And so that means there's less ETH in the pool, but more Shiba. And that delta, and in fact, if you take all the Shiba and you sell it back for ETH, you might get like 248 ETH or something instead of the initial 250 ETH. So that's the concept of impermanent loss. As long as the price that you put in is different from the price you get out, 99% of the time you lose money. I'm probably explaining really badly, but think of it, if you really want to think about it, I think it's like you're shorting a put on trading, in trading terms. You're shorting a put, and which is terrible because unless you know what you're doing, you're losing money. The only thing I would provide liquidity for is stable coins because the price don't really change. I think, oh, there's one more.
We enter the networking section.
Oh, okay, yeah.
Yeah,
Sure.
tight. The schedule
yeah.
kind of tight. Yeah. Okay.
Yeah.
So for every online audience, so now you might feel free to chat and communicate with Kendrick using the chat room functions. I'm enabled for all of you guys. So you might check out the slides, your share screen of our slide. You can see, you can simply click the chat button to insert the chat and start conversation. So also for Kendrick, please make sure you are sending to everyone in chat if you are typing.
Oh, okay. Yep.
Yeah, or you can like just answer it by using the audio. I think that's
okay. Okay,
yeah.
I'll probably do the
one
audio.
I have to emphasize, our webinar is focused on the applications and improving the ICT professional skills. So there's nothing to do with the financial and investment advices. Yeah. Okay. So Kendrick, you can just feel free to like.
Oh, okay. So, okay. Okay. So I think someone asked, do these opportunities happen more in illiquid pairs or the mainstream ones? Personally, I find that the illiquid pairs net a bigger profit. The mainstream ones happen, but they're less frequent. That could be me just being not inefficient, or there's like a other alternative path that you could possibly find that's way better than the one I'm finding. There's just so many, there's just too many routes to kind of explore. Because keep in mind, like these trades that you want to go from, say, token A, B, C, and back to A, it's almost like an NP problem. It's like if you did computer science, it'll be like the traveling salesman problem. Like you need to compute so much possibilities that each path that you take grows exponentially. The amount of compute power required grows exponentially. And so I probably am not computing it really, really well. That's why I find profitability in liquid pairs, but you know, it could be different. But personally, the liquid pairs kind of push the delta enough that I can rebalance them. Yep. And I think I think Matt Lee asked, do these profitable opportunity, oh, sorry, there we asked, okay. Jack asks, which programming language is used to write smart contracts and dApps? Where can I learn this programming language? So I want to emphasize that this is actually many, it just isn't one language. So you have the contract that does the logic for the arbitraging, and then you have the bot. The bot can be in any language. So if you want it to be in JavaScript, you can. You want it to be in Python, you can. And then if you want it to be in Golang, you can. So any programming language for the bot. But for the smart contract and the dApps, it's usually in Solidity or this language called Viper. So that's, if you're really curious and you really want to start out, I would just say play around with Uniswap v2 and then kind of like poke around, like see how the swaps happen, try and read the transactions, or try and use ETH scan, muck around with it. That's how I learned. Yeah, I think Cassie, what are you personally investing for cryptos? I do not personally hold any cryptos. I'm very sorry. What's some you think with good applications, good use cases? I mean, I just trade. I don't really invest. I just enjoy the technical challenges. So right now it's on Ethereum. It's fun to write these bots. I learned a lot. And I think the next area will probably be Solana. What are the what are the roles and responsibilities of being an Ethereum developer? I mean, responsibility is just don't give bad financial advice since we're in such a speculative space, in my opinion. Don't be a big shill. And the roles, I guess it's a big rabbit hole. So it really depends what you want to do. For me, I started off simply because I like the doggy coin. So I started off with the memes, but then as time progressed, I got a little bit more interested in the zero knowledge space. They call it like ZK rollups or zero knowledge proofs. So that's the contracting role I got with Ethereum. But then after that, I got sucked into the financial applications, like DeFi and DeFi summer when it happened. So there is a huge rabbit hole. There is also this thing called DAOs, if you're curious, like decentralized autonomous organizations. So it's just a big rabbit hole, and almost anything goes. Like, it's impossible to answer. Why do you only focus when ETH 2.0? I hope soon. Why do you focus on ETH or Solana versus BTC? I just go whatever's interesting. I don't really have a preference. And I think one final one would be, are there always conflicts between bots and open ledgers? Since the ledgers are public, are there more? Yes, there's always more opportunities. Just depends on if your bot is more efficient, depends on how well you calculate the opportunities and how well you execute it. This is all about interpreting, calculating, and executing. So there's always opportunities. Anyway, I think I'm out of time, and I think it's
I think your pod can like 135.
Oh, 135.
Yeah, I see some questions are still popping. Yeah, from
Oh, okay.
yeah.
Are there any upcoming protocols, other ETH? And so, I mean, I just go wherever the action is. I don't really like, and right now that's ETH and maybe Solana. I'm not really married to anything. I just go wherever opportunities are. Yeah, I think that's it. Again, if you want to reach out, just message me on Twitter at Kendrick_TN. Hope you guys enjoyed it, because I definitely enjoyed chatting about this.
Yeah, we're happy to have Kendrick to share and answer such questions for us. Okay, big hands for Kendrick. Okay, right. Thank you so much for your great presentation. So that's the end of our first workshops. We'll now have a 10 minutes break time, and upcoming section will begins at 1:45 at 10 minutes. So you can have toilet break or water break. So we will get back to you on 1:45. Okay. Hello, welcome back to our webinar. So I hope you all refresh a bit yourself after 10 minutes break. And we are moving on to the part 2 webinar. In these sections, we will learn about the development on one of the newest blockchain platforms, Solana. It is an open source and decentralized, and consensus is achieved by using proof of stake and also the proof of history. So some may say that Solana even has the potential in the long run to rival Ethereum. These sections, we will include a coding demo sections performed by our guest speaker. So if you are interested in the environment setting up, and also you're eager to learn about how the Python program, the random number generation and type safety, this kind of related knowledge and skills. So please stay focused in this part 2 workshops. And if you have any questions about the content of the workshops, you can just enter it in the Q&A question button. Our guests will answer it one by one in the subsequent Q&A section. So let's welcome our second speaker, Sid, the technology lead from CM Intelligence Technology. So yes, Sid, feel free to present. Hi, Sid, have you opened your mic? Hello, Sid. I think you are still muting your mic. Oh, can you choose? Can you click the audio button and choose the speaker? You will use the AirPod Pro microphone as your microphone. Oh, yeah. Now we can hear you.
Let me try to switch back to AirPod.
Yeah, much better.
Is it working now?
Yeah, it's working now.
Okay, cool. Like, I don't know why it wasn't working, but I was not muted. So I'm gonna be talking about supersonic blackjack, and because when Kendrick left behind his previous talk, like I'm assuming like the people who are listening also already aware of the MEV problem, which is why like it's kind of like funny like how we didn't plan at all to have like this thing to be connected, but like it works out that way because when you talk about smart contract blockchain, you have to eventually talk about how it can be attacked. So this is going to be quite a fun one. So get to know me first. So unlike Kendrick, who basically doesn't pick side, I'm actually like a very toxic Bitcoin maximalist. So I have done well. I'm a striving digital nomad. So like I've been working in Thailand for a few years now, too. Since I came back here from Hong Kong, like it's just been kind of like much easier to focus on like basically blockchain development and everything. It's actually quite something that I think like people will be more and more interested in because like it's something that allows you to basically have your life savings and everything like just on the go. So that's why like if you are a striving digital nomad like me, I think you enjoy it very much. So I have developed smart contracts on Ethereum, smart BCH, basically any other EVM compatible sidechain. Like I've also done all of that already. And Solana is my new interest, but like I'm doing all this as adversarial research because again, like at the end of the day, like I'm more like a Bitcoiner, someone who actually believes that like the immutable ledger should not be suffering from like all this like MEV and like all of this like speculative market part. So funnily, even though I've been in Hong Kong for 10 years, I still don't speak Cantonese at all, like not very well at least. So we won't be talking about Lightning and Synonym today, but just wanna like preface to everyone first that none of this is financial advice. So like no one should take it as financial advice. This is an IT only kind of talk. Please do not like believe me. Like I'm not a very good investor. But moving on. So why I think like an IT professional might be actually benefit from this talk. I think like this is something that when you really take a look at it, like it's something that has no barrier of entry. So like you don't need to be like a senior software engineer to like join this kind of industry, because like we probably need more something more like a creative mind, everything like that. Experience does help you out, but if you're a skillful person, a skillful engineer, like you don't technically need that much experience to be in it. It also attracts like non-technical people, like artists and like people who want to do like musician, everything like that as well. Because when it comes to like ownership and digital scarcity, it affects all of us. So like this is something that I think like will be very interesting. But there will be no interview process. Like the interview process is like you are able to show your work. This is the most important part. Like the interview process is like you will be open sourcing your work all the time to people, and that's the challenging part to be in this industry as well. So let's see. Experience does help you with the defining the scope and everything like that, because like I said before, like there are no set standard in this industry quite yet. But yeah, like you will be setting the new standard, and if you are the standard setter for like this kind of like development and everything like that, you will have to like be a good time manager, a good scope manager, and basically like a project manager and everything like that. So it requires you to be a bit of a polymath, and that's why like people are very interested in it. Again, not financial advice, but if it's something like you are interested in as a career change, I think it's a fun one because it needs more diverse perspective in people. So we'll be talking about Solana. So I know a bit about Ethereum as well, but like I cannot talk about Ethereum. Just like I just cannot talk about Ethereum. Like it's like something that like I become way too negative on. As in like I follow the development very closely. I've been in the crypto industry for a long time. My first project was actually based in Hong Kong, a small project called DigiByte. So it was a very much like a much faster version of like Bitcoin at the time, and also much more secure. Back then, like no one actually supports like smart contracts just yet, and it was like a working in progress thing. And like the more I learn about like basically the competing technology, the more I'm bullish on like the simpler versions of it, because like in terms of like scarcity and everything like that, like it should be something that can be done and verify directly on top of the chain. So like we are moving not to get too much into the detail, but like we're moving too much into the socially enforced scarcity at the moment. And I think like that's something that when we talk about like arts and media and everything like that, like it's going to be something that is hard to compete with like an open system and a closed system. So we're going to be talking about who lives on the Solana beach. That's basically the name that like Solana beach is basically the name that like originated the blockchain Solana. It's a favorite beach for like the founders of Solana, Anatoly, and that's why like he named his blockchain Solana. And we're going to be talking about like the smart contract design and everything like that. We're also going to be doing like a few just a quick like coding exercise on like basically like where do we start from, and why is it important to use Rust programming language instead of like any other one. why is it important to like basically have a very good design for your contract. And if we have enough time, we might just like cover more and more like a coding exercise. But I will be talking about the introduction and like the introductory period first, and this will not be very code heavy. So if you're interested in like coding heavy, please pay attention to the later half. So the people who live on Solana Beach, you and I. So like basically we're the people who care about like basically the current state of the internet to not be owned and controlled by any party at all. So like that's why like blockchain is very important, because blockchain is a technology where anyone can take partial ownership of like the internet. Like let's say like a section of the internet. So obviously like when we think of the internet nowadays, we think about like web bots and forums and Zoom, the one that we're using right now. We're thinking about like live streaming, like Netflix, like YouTube. We're thinking about all these things. And then we think about blockchain because it's also becoming a very important part of the internet as well. Yeah, so this is a part that actually enforces digital scarcity. And I mentioned this concept quite a few times now, but it's basically something that means every file and text and everything can be copied and cloned, but all these things that exist on the blockchain are something that like can only exist once and shared and sent and like transacted and everything like that. That's why it's a new concept in terms of like digital technology, and it's very interesting because it means that like value can also be transacted. If value cannot be copied and cloned, it can then be given and taken, and that's the interesting part. If we do value like a transfer on a centralized database, that is basically giving too much power to like one centralized party, and that's why like in order to make the value transaction credible, we rely on like something like blockchain technology, and that is the number one problem that Solana is trying to solve. They're trying to solve the fact that like we have a lot of value, that capital is actually very abundant in the world, but it's very hard to like organize and coordinate with one another. So like ideas that like Kendrick mentioned earlier in his previous talk, like decentralized autonomous organization, that's something that blockchain can actually help with, because it's basically the process of coordination of like funds and values into like a crowdfunding contract, into like something that controls and can be voted like directly on top of the chain, and it can move much faster than like any public companies or private companies, because everything happens in real time. So yeah, like this is like the people who live on Solana Beach. It's all of us. So Solana is actually like one of the fastest expanding system. It has the most impressive user-based growth. It also has like basically like the one thing that I mentioned a lot about Ethereum is that like when it first came out, it used to be a lot more decentralized, and then it became more and more centralized. So like we used to have up to like 30,000 like Ethereum nodes, and it basically shrunk inside all the times because like the mining of Ethereum is just not very profitable. It doesn't really support like the miner base very well, and then like the competition also like kicks out a lot of people as well. So on the other hand, like basically Solana, when it first launched like 1.5 2 years ago, it's gained more and more traction, and like more and more people like joining in the validated network and everything like that. So this is a proof of stake, which means that like you still do need to be on the inside to get the most out of it. But the way that they have promised expanding this insider network is the way that I consider to be top-down decentralization. If I consider that there is no other thing as decentralized as Bitcoin, that would be bottom up, right? Because anyone can mine, anyone can have a node, anyone can do all the things that like everyone else can do. That's bottom-up decentralization. Solana is going the opposite approach by saying we're going to start very centralized and we're going to slowly decentralize. Whether or not they can do that, I don't know. I honestly don't think so. Like it's one of those things that when you think about like every single like hierarchy tends to only centralize more and more the older it becomes. So this is a very big promise, but it's also being approached by very, very smart people. So let's all give them a chance and see where that goes. Important note to like make right now is that like because of decentralized infrastructure, decentralized technology that they picked up with, they're not as hindered by minor extractable value as Ethereum is, which is very interesting. They also can keep transaction fees very low. They can also do a lot of transactions per second. So like we'll cover that in a minute. So be careful. Not financial advice. Be careful. That's something that like we just need to like keep mentioning over and over again. So this chain, this network, the majority like investors and like fundraisers are coming from the tech bros. That's basically like Silicon Valley. That's basically like people who are very, very suave, people who are very smart at like raising fund, and also I would say highly competitive. I've lived in Hong Kong for many years, so like I know very well that like we all tend to consider ourselves very highly competitive. But yeah, like just be careful. So I'm just gonna throw out some new words that I think everyone should know. This is just gonna be like a fun trivia. So first word you should know about is what I call a rug pull. That is when a project or a team promises something. They have all this like very fancy and very nice artwork and very good Discord group and very all this thing. And then you raise the fund for them. You basically like, you invest with them, and they just disappear because they don't like in this kind of like wild west of the internet. They don't actually like have to deliver. Like there's no enforcement just yet because it's a global network. It's almost like impossible to like enforce. So a rug pull is when you get promised something, they have the funds, and they just disappear. That's a rug pull. A meme coin, that's the second word. A meme coin is basically just like what we talked about earlier about like Shiba and Doge and like all these very, very cute sounding names. That's basically like I would call it like meme investment. Again, not investment advice, but meme investment is basically telling you that like, hey, like none of this matters. Like we don't promise you anything. We're just gonna promise you a fun time. We're just gonna promise you number goes up. Yeah, that's it. That's all they promise, and they can, because like if you get in on a meme, it's very fun. You see the number goes up, you have a lot of good time, and if you're early enough, you might actually profit out of it. So that's meme coin. So this one is exit liquidity. This one is basically the fun joke that I make to people all the time, that like if you get invited to play poker with like a new group of friends, but you don't know who the patsy is, you're the patsy. You're the person who they bring you to so that like everyone can make a lot of money out of you. So be careful, like if you get invited to like Telegram or Discord group, like all that stuff, you might become someone else, like exit liquidity. Okay, doom and gloom part done. Let's talk about NFT. NFT is as a tokenized representation of like a unique object. Yeah, so this is like a new idea that like if we can enforce digital scarcity on money, why can't we enforce digital scarcity on other things like art piece, like music, like advertisement, like avatar, like everything. So NFT is something that, yeah, I think it's going to be interesting because when I take a closer look at it, I think it has real world use case, a very niche one, very small one, in terms of like membership, in terms of like ticketing, in terms of like exclusivity, in terms of like luxury products. People are heavily invested in like making NFT a real thing. And just the fact that like we hear it everywhere now, like someone else has like launched their own NFT, I think it might become a real thing. But we'll see. So just some Bitcoin language as well. So NGMI, if you ever see that in the chat, that means not gonna make it. So like we have to understand like if we're looking at this as like just a bunch of like tech projects and everything, a lot of them are not gonna make it. So NGMI. And this is something that I also do myself as well because I'm very, very toxic. I sometimes say, have fun staying poor. So like this is something you say to like someone clearly richer than you, but like they don't get it. They don't get it. Like they don't get why new technology is interesting. They don't get why people want a non-control internet. They don't get why people want like this basically in like DeFi and NFT and everything to be the new technology that like leads to Web 3.0. So those are the people who will have fun staying poor. Clearly, they are way richer than us, all of us, because I'm wearing a Uniqlo t-shirt because I just don't make any money. So how do we do this? Like, how do we build trust in a trustless world? Like we have to understand first that like, even though like I'm a Bitcoiner, like I know that like when you have a proof of stake, you tend to centralize around the people who are closer to validated, people who are stakers. They're always going to be able to invest in a different way than you do, invest their time in a different way than you do. They have different incentive than you do. They are someone who, even though like you might be a creative person, you start your own business, you have like a lot of like very good like loyal to customer and everything onto the blockchain. But the people who are closer to like more capital, they can just become anti-competitive with you. They can buy you off. They can do the same thing that you're doing, but like incentivize more people or new people or do better marketing than you. So like this is something that we have to understand that like even when we achieve censorship resistance, it still might be a very unfair network. Like we might be in a censorship resistant transaction base, but we might not be in a censorship resistant network. And this is something I think everyone should understand. Also, there will be bad ideas, there will be good ideas, there will be ideas that are good but don't have enough marketing. There will be ideas, there will be like very smart people who never get to shine. So this is where I think getting into it early is good for you, because you have to be exposed to enough bad ideas to know which one are bad. Like, and that's just basically how I believe it. Like, I believe everyone here, like, I don't know how many technical people are in this audience right now, but I believe everyone here can become a coder because it's the easiest thing in the world. All you have to do all day long is make a lot of mistakes. Make a lot of mistakes and you learn from it. Like you basically eventually get closer to like a working product. So like if you can make mistake, you can become a coder. That's how I see it. So is Solana the Ethereum killer? That's not playing. I think so. I think that like Solana actually has the chance to actually compete with Ethereum. We keep talking about a lot about network effect when we talk about Ethereum, but the incumbent advantage doesn't really exist when the market is not fully established yet. And nowadays, when we look at the real like people who use blockchain every single day, there's like around 22,000 users on Ethereum per day. Like people who don't just like browse, people who actually use it to like transact and everything like that. That's minuscule compared to like any other website. Like that's minuscule compared to like Facebook and Google and everything, who to use that to like transact. So like when we talk about like blockchain and everything, we have to understand that like we're really, really early, and Solana works from like an entirely different infrastructure. Where we have to see basically like who the real customers of the network are. And honestly speaking, this is where I have a fundamental difference between Bitcoin and Ethereum and everything. So like we want to compare them, like who are the real user. With Bitcoin, it's everyone. Everyone's a real user. Everyone can do whatever they want to do with it, like with their asset on Bitcoin. With Ethereum, the real users are not you. It's the stable coins. It's the NFT marketplace. It's the vaults. It's the hedge fund. It's all these people who I would say more technical minded than we are. Therefore, like, yeah, like it's gonna be quite interesting to see where this goes. But if the real market is very small and minuscule and have to make very economic choice, I think eventually Solana will have enough customer, which is the apps, the games, like everything will some of them will choose Solana for sure. So this is why I think the network effect argument doesn't really make sense when we talk about like comparing blockchains, at least at the moment. So let's not be a bit more doom and gloom. So not every single blockchain is created equal. I think I've left out Ethereum on this chart because I feel like Messari has like some stakes with Ethereum, so like I don't want to use that information in this part. But like as you can see on the chart in this slide, you can see that like most of the blockchains are not distributed equally, and I don't think they can because the technology is like a Pandora's box. Like I don't believe there can be a new blockchain that's like, hey, come mine for us today, and then you will get rewarded like in 10 years from now. That doesn't happen anymore. So that's a reason why it now has to be fundraised the same way that like any Silicon Valley startup become. However, like Solana is a very bad example of this because yeah, like a lot of the initial asset, what we call it the pre-mines, in fact, distributed to the insiders, a lot of it, like a big chunk of it. So that's why, yeah, this is not a good look, but it's an honest look into what these networks are already about. I think, well, we don't have to talk about Binance because it has a business name in its chain. We can talk a bit about EOS. EOS is basically a fork of Ethereum. They used to be a project on Ethereum. And basically like Ethereum's like early competitor is like Tezos and Tron. Tron is not on this graph right now. So we have like a few other like things on this graph right now that is interesting. But yeah, I think Solana with its really small public sale, very small public sale in its initial launch, it just doesn't look very good in comparison. So like not all of these are created equal. Like some of them are just a bit more centralized than the other. And now why does that matter? Like why is a network centralization matter? Like maybe we just want to use it as a user. I think it matters in the long run. Maybe like you don't see the effect of it like immediately, but you will see the effect of like a centralized network in the long run, because when the user doesn't have a voice in the network, they just leave, and then like we don't grow like a healthy ecosystem in that sense. So let me take a break. Okay. Now, it's very clear that there are a lot of options out there, and it's very clear that like they're competing and they're dealing with like very tribalistic community. I'm one of them. Like I'm basically like a very tribalistic person when it comes to this, and let me explain why. So if any of you are like JavaScript framework developer, like a front-end developer, like you know that like you do not want to waste your time using the wrong framework. Like it's more about the opportunity cost of like believing the hype, believing the marketing, believing that like, okay, like they're gonna read something that fixed the previous problem that everyone has. but they never do, or they can't, but they can't explain to us why and everything. So if you take your time as opportunity cost, because time is the most valuable resource, I think there is some real reason to be a bit more tribalistic, or at least a bit more demanding of like the product that we're promised to be using in the future. Therefore, yes, I think we can definitely be more selective. Now, one thing, again, not investment advice. One thing is that like if you do see that like a network has more marketing than actual development, that would be a red flag. So if it relies on the marketing to create like a large hype, there will be a large burnout as well. So like this is something to watch out for. Make sure that like you choose to use your time wisely. That's all I can say. Like invest in your time, and then everything else will follow. TikTok, next block, Bitcoin's number one. Not investment advice. So finally, we get to talk about a bit of the smart contract. Smart contract is very important in this like industry. Let's assume that like not everyone here is like a technical minded, like not everyone here is a developer. It's still more important to know why this one is like better in this area, why this one is better in that area. That's because when we talk about like the emerging apps, the emerging dApps, we need to know that like how composable they are. When we're talking about software that's on the blockchain, programs or smart contracts on the blockchain, they're meant to be interacting with each another. So the more composable, like in this example that is on the screen right now, this one contract is like at least like interacting with like 2 other contracts out there. So like the more composable they are, the better the environment becomes, the better ecosystem becomes. And this is why at the moment, even though I have been bad talking about Ethereum for some time, I do say that Ethereum is the most composable chain at the moment. Like the apps, the smart contracts that are deployed already out there are working together in tandem. Again, also being exploited by MEV, exploited by like people who have like bots to take very high risk opportunity, but take someone else front run to someone else trade. That's also out there as well, but that's only available because the entire network is built to be composable. Now, Solana is a bit less composable, but that's because it's early. So we'll have to see. I think like the head start that Ethereum has will prove to be very helpful to other chains in terms of like their roadmap moving forward. So now we have to talk about like the real strong case for Solana. It's really fast. It's just really fast. Like there's no way to talk about this without saying it's just really fast. Like this is what happened when we have a ex telecom engineer design a blockchain, design a decentralized network. Like he focused the best on the speed, and that's where in terms of like scalability, like it becomes important, because if you do want to support the entire world, like we do have to talk about like how the entire world can transact at the same time as well, without basically hiking up the transaction fee to a level where only the rich people can can afford to like use the network. So this is a strong side, and this is why basically companies like Western Union cannot compete, right? Like when your entire business is something that is just remittance, but like you cannot match up with like the speed like of like something this fast. We have like basically like a killer app already built into the chain itself. So like this is not talking about like specific apps out there on the chain. This is talking about just the speed. This is why MasterCard and Visa are becoming more and more concerned. They're doing their own blockchain research. They have their own R&D team to make sure that they can catch up to something like this. But not only is it just really fast, it's really fast while still distributed. Therefore, like a distributed system, an open network also adapts faster as well. So like I'm just gonna keep using the word fast here, but like that's the kind of speed we should be talking about. So the video that you see on the screen right now is actually a exhibit from Breakpoint Lisbon. Like we've seen a few photos earlier from like Breakpoint Lisbon, the convention that happened last month in Lisbon. This is one of the exhibit that they are using the whole room to show the real time. So like back last month, these are all real time like transaction that happens on the chain. So they are very, very confident about like how fast their network can scale, that they're able to like create a room like this that shows real time transaction. And that's ballsy, that's confident. I like that about them. Now, let me just like talk a bit about like basically like how they can do this. They're using a method that a method of coordination that they invented themselves called the Gulf Stream. This is something that's also on top of like the proof of history as well. We'll talk about the proof of history a bit later. And yeah, so it's not trying per se to be money, and it cannot be money because like the entire network is built on top of a rent system as well. So like back earlier when I was talking about how Ethereum's real customers are the apps and the stable coins in the NFT marketplace, it's the same way here. And like I think the way that like they're using rental, rental is something built into the smart contract that we'll cover a little bit later. A rental system to make sure that like we don't ever waste block space, valuable block space, can kind of also make sure that like this never gets confused as money when it's more like borrowed rights to be on the chain for a while. So I think this is like something that makes it a bit more interesting, but also much harder to use to start developing from a software engineer point of view. And this is something that you also have to be more concerned about. It's fast, it adapts fast, it's competing with like very fast competitors, and it invents its own new technology to make sure that it can scale fast. So okay, I think we're done talking about speed, so we talk about the actual technology that make the speed possible. So proof of history is basically, yeah, it's basically what happened from the telecom engineer, someone who designed like large telephone tower. Well, not designed large telephone tower. Someone who designed a system that works for telephone towers to like communicate with one another would adapt to using a blockchain. It's basically something that creates a traceable trail by using previous transaction and everything. Okay, I'll talk about it a bit later. But the more concern here is that like it doesn't always work. Just be clear first, it doesn't always work because of the infrastructure that it relies on. It's trying its best to not be MEV exploitable. Therefore, like it has a large weak point about this technology a little bit, and it's currently in beta state. So we're gonna have to be very careful about like talking about this like proof of history, but it promises very high throughput. It means like the number that we mentioned earlier about like 65,000 transactions per second. That's the one in theory. Like I think the real transaction per second that you see in real world usage every single day is 20,000 transactions per second. That's already like the highest out there. The highest smart contract chain today in production. Well, I keep not calling it production because they title their network beta. But it also creates a two-tier system as well. Like as a software engineer, like we always talk a lot about the people above the API and the people below the API. So like the user will never actually gain the final benefits of like the people who are above the API. So this becomes that like instead of like a decentralized network, this is more of like a distributed service that you pay to use. And I think that's the very big distinction you have to like make in order to use this kind of network. Now, it does plan to be more and more distributed. And like the way they plan to do that is basically one day just having a box that like 10 title Solana that you just plug in your home like a Wi-Fi router, and then you're connected. So like eventually they plan to make you also part of the validated network as well. But that's heavily reliant on Moore's law, like the law that like we can compute more and more every 2 years. But we'll have to see like the transistor expansion of like speed and size like doesn't always follow Moore's law, but it is up there. The market value for this new technology is very high. Like this is already something that is interesting because you have like a very cool, interesting technology like this, and it immediately becomes open source and available to the world. So like this is also something that I think we should commend them about because it's very cool. Now, let's talk about what actually underlies the proof of history. So what underlies the proof of history is something we call a verifiable delay function. It is invented by aliens. We don't know who built it. It's like the Stonehenge. It's like the pyramid. Like we have no idea what the hell it is. Like it's crazy. What the hell? Like I've read this paper many, many times, like 30 pages. It's something that I can only summarize. I can't explain it. I can only summarize it. It basically, it's basically something a hashing function with a verifiable time, so that the result created is used for the next hashing, and you can do that repeatedly. Like when the founder first came out and talked about this technology, he said that like at launch, like a simple CPU on a cloud server can like do 2 million hashing function per second. And that was a very impressive number. That's why he chooses this method to do a blockchain. This creates a traceable trail, just like a ledger, and is used by auto validator to queue all the transactions into block as efficiently as possible. Now, because we have a validated network, the propagation time is almost zero, since validators trust each other. Well, trust to a certain extent that like you can read their VDF result, and then you can verify that it's true. So this is the fun part, is that like because the validators have to work really, really hard, you don't require propagation time. So it is a distributed network. Like I want to be as fair as possible. It is a distributed network, but because it relies on the validator network, it is not technically decentralized. Now, everything sounds great in theory. Even if you don't care about creating money, that cannot be controlled. This is something that can be controlled. Everything sounds great in theory. In theory, because it doesn't always work. Like I mentioned this before as well. Like when you look at a highly efficient system, I want you to like have a mental image of like the global supply chain network. It is a highly efficient system until it's not, until the Evergarden incident happened in Panama Canal. Like when you have like one simple fault, like the entire network can go down at the same time. And that's exactly what happened to the Solana network once or twice already in the past 2 years. Basically, like it's still considered a beta because like it still goes down. There's still downtime of over 20 hours, like less than a day, but it's a long time in terms of like blockchain history, because like if we only count time as like block time, like that's a lot of blocks that it missed. In RPG term, we call this a glass cannon, like a person who like can be very, very effective, very efficient, but not very resilient. So like you go down after a few punches. Now, what happened was actually like there were a lot more, like 300,000 transactions per second by a spam bot that attacked the network. Again, when we design a network like this, we have to be adversarial. We have to think about it in terms of like, how do we attack it? How do we make it go down? And this network can go down by very few bad actors. So like, I want you to be very careful about this. So like, if you want to read more about this, I've left some sources on the screen. You can read more about like how the resource exhaustion happened. Now, the worst part about like how it got wrecked is that instead of like, be able to like have a way to come back online organically, I would say like basically coordination should not happen off chain, but it happened on Discord. Like in this case, it happened on Discord. Like they just talk to each other and say, can we try turning it off and on again? And they did. And so a coordinated restart was actually like planned out by the developers and instructed to the node validator to like restart the network. But that restart process also like takes more than 20 hours as well. So yeah, not looking good for them. But this is the trade-off. Again, this is a trade-off of like having a network that is less prone to like MEV attacks. So like, because it doesn't have a mempool. Mempool is something that like the previous talk we talk about it a little bit here. Like the mempool is something that we can create front run opportunities by. So this network doesn't have a mempool. So like the chance of creating a front run opportunity is much lower. Also, I talked earlier about like how centralized it was. 12, like the magic number is 12 here. Like you only need 12 validators to actually just halt the network completely. So like this is something that is, it's smaller than a board of the director in some companies. So like this is something that we have to be mindful about as well. So again, Bitcoin number one, not investment advice. This is just a closer look at like a decentralized distributed network. Now, nothing happened. Absolutely nothing happened. Like I talk about like all the bad things about it, but nothing happened. Like we don't see Solana price being affected at all. We don't see bad press. We don't see anything. Like absolutely nothing happened. Like it's a small dip and an immediate recovery. And that's because Solana in its current state is also backed by FTX and Sam Bankman-Fried as well. He's like the world's richest like young billionaire right now. So like that means that like the current network is reputation based. So like we know who the investors are. We know who like the people working on it are. We know all of these things. So like this is something that is built up on trust and reputation. Therefore, this is why I keep calling it not decentralized. However, the market didn't react to it. Like the market doesn't care that much about decentralization. They just care about a bit more ownership of the internet. So like this is why trust is the operative keyword. And I think it can be dissolved over time, like a long enough time. So the roadmap, their roadmap says that they will consider the problem, they will fix it, but no viable proposal has been made about the downtime just yet. I personally think that it would take more than a few years to fix this particular problem because it's a architectural decision that they made. So yeah, they are not going to change their architectural decision. So it's going to be something that relies on how they hack the network together to make that decision make sense in the hindsight. So that means that we're gonna have to like wait and see how we're gonna have to wait and see how they can solve the problem. And this is like something that might not become a problem in the future because like if the network itself becomes more and more resilient, it might not become such a big deal. So not something that you would like to hear when we talk about like a decentralized network, but that's just the reality at the moment. So let's talk about dApps. So the decentralized apps on the Solana network is actually built on top of Rust and C, but I haven't seen any C apps out. I haven't seen any C smart contract out there just yet. So like I'm just gonna consider it to be like Rust programming language. But the front end, the UX and UI is still just like the same as everything else. It relies on web framework. It relies on JavaScript and TypeScript. So like if you are a technical minded person who has listened to this and are very afraid of this like new beast, new opportunity, like new possible career change, I want you to be aware that like it's not that big of a change. Like you can still use JavaScript and like TypeScript to do a lot of the stuff in this like industry. Maybe not the smart contract itself, but we're going to talk about like the smart contract more heavily today. I'm not a very good UI designer, therefore like my example later will just be mostly command lines and like mostly how to mostly how to use the minimum viable product of like this kind of like infrastructure. But yeah, like you can learn Rust. It's a very hard language to learn. You will probably never have this as a criteria for any other job. You can't get a job in Rust. Like that's just like the meme. Like you can't get a job in Rust. Like there's just no job in Rust. But again, JavaScript, TypeScript, you can also work a lot with this technology. But you need to know how to use the wallet. So like if you're going to be a front end designer, you need to know how to use the browser extension wallet. You need to know how to like make your website interact with that. And you also need to make sure that like the user experience is not bad. So I can talk a little bit about like my friend's experience with Ethereum again, like doomer and gloomer when I talk about Ethereum, because Ethereum is not just Ethereum anymore. Ethereum is also like all the other EVM compatible chain as well. My friend who wanted to use like a bridging between like all the other like EVM compatible app chain had the worst time because they have to connect MetaMask with sometimes to Ethereum, sometimes to Polygon, sometimes to Binance Smart Chain, and like connect all the bridging and like try to exercise all of this. And then you also have to have gas on every single chain to make sure like the wallets that you use have like some through line between all of them. And this is why like if you're getting started as a developer, like I think you have a better chance of using Solana because your life will be much easier when you don't have to like design for interlopability just yet. Like you don't have to design for like your user becoming like very tired of like Ethereum transaction time and jump to a chain called Celo, a chain called using Matic, using all of this. So like bridging is the worst nightmare for Ethereum user. This is like personally speaking from like my friend's experience. And then we haven't even talked about rollups just yet, which also makes user experience much tougher as well. So Solana, they have only a few wallets you can use. The most popular one is Phantom, which I've listed here. You can look that up and like see how you can design your front end to work with it. Now, this is like the part where I think I can say again, like I'm not giving financial advice because I'm bad at it. Like I don't believe in all of this. Like I don't believe that like all of the current DeFi and everything and the NFT is very good because I feel like a lot of it is very subjective and speculative. So like when we are trading stuff on Solana or on Ethereum, like we're buying things that are given value by subjectivity or by speculative like value. But because it is where like the future of web will be built on, I tend to consider myself already wrong about this. Anyway, digital scarcity, like a word I mentioned earlier, is the crux of Web 3.0. So like when you have like art pieces being traded, but then again, like it's traded, someone bought it, but I can still save it and put it on this slide. So like at the end of the day, it's still somewhat socially enforced scarcity. So be careful with like your investment or your time investment. I think that's the most important part. So yeah, there's not that much currently productivity of like economic productivity being created on chain just yet, but there's a lot, I mean, a lot of speculative revenue being created on chain. So what that tells us is that capital is very cheap. Like there's a lot of capital in the world. Attention is very expensive because every single project requires like a big marketing team, big hype, big Discord community, big everything. They require people to pay attention. So capital is cheap, attention is expensive, and product is not there. Product is not existent. So this is something that I think that sums up the current state of the market. I tend to call this, like, I just coined the term Ponzinomics. Like it's a Ponzinomics. Like I don't see why we're trading Shiba for Doge. I don't see why there's a new coin called Floki. I don't see the difference. And basically, like if we're trading them because they're named after like a famous TV show on Netflix, like Squid, that's to me a pump and dump. Therefore, like I don't invest in those stuff that much. What about real products? What about real projects, like the ones who are promising like play to earn games and metaverse via products? We'll mention them at the end of this talk. I think the technology is here to support it. Like I tend to like swallow my own words all the time when I talk about like new products. Like maybe they shouldn't be on chain. Like what's the point of like putting IoT on chain? What's the point of putting utility token on chain? I get proven wrong because there are people working on these products on projects that I don't know about. So I'm glad to be wrong in that sense. So we're gonna go ahead and start our a bit more technical session. So I hope everyone's ready. Maybe I can, before I move on, maybe I can have like a mini Q&A session now, if that's possible. Let me check the chat for a little bit. Cool. Okay. I don't think there's any question just yet. So we'll go ahead and start the environment setup. This one. Is it very popular in finance sector so far? Not other. Yes, actually. Like so, I prepared some answer in terms of like why is more popular with like finance and more popular with use cases that are just like basically not what we consider to be the internet, right? Like the internet, like live streaming and like file sharing and all these things, like that's what we consider to be internet. But for some weird reason, like we are using blockchain for like mostly just like trading like stable coins and all this thing. Why is that the case? That's the case because judicial arbitrage, and I think you need to look up that word because it's something that maybe we should not talk too much about. But like judicial arbitrage just means that like because we're in the gray area, there's no one to enforce the rules just yet. So like that's one of the reasons. The second reason is that like the technology is actually just built for this. Like when we go look at the interviews by Anatoly on Raj Kukal, let me move back a little bit to show their face. My mouse is gone. Yeah, these are the two, Raj Kukal and Anatoly. So like these two guys, when they first emerged into the scene, they know that like who their competitor is, and they're not competing with Facebook. They're not competing with Google search, right? Like they're not competing with like Boston Dynamics. Like they're competing with NASDAQ. They're competing with like the central control of financialization. And that's a big word, but like it just means that like we all know that there's a difference between Wall Street and Main Street. We all know that there's a difference between multi-million-dollar startup and mom and pop shop like next to 7-Eleven. And I think even though we don't have like a true solution just yet, I'll talk about like why I'm a negative on Ethereum later. Even though we don't have a true solution just yet of like making this like very decentralized, I believe that the current system of like DeFi that we're looking at, it's actually democratized, like much more democratized than it used to be. So in fact, like I always like just make that joke, like it's not decentralized finance, it's democratized finance, which is why it's a lot more chaotic as well. Like we're actually like moving to a, like democratizing finance very quickly because of the censorship resistance. But yeah, like this is why the current use case is this. We'll talk about other use case at the end of the talk. Like I have a few prepared, so like thank you for waiting. Ethereum, it's a good technology. Like it's actually a really good technology. But like we can see the trend, we can see where it's going, and we can see the roll-ups. And that means that like the future of Ethereum will be the main chain, which is just a ledger, and all the smart contract stuff being done on rollups, which means that like the main chain is a immutable ledger that just deals with like transactions of people, and then the rollups will L2 will be dealing with like a smart contract and everything. And maybe that sounds a bit reductive, but that's exactly what the debate was all about. Like if you are a crypto OG or Bitcoin OG, that's exactly what we said would happen. Like we said that like we should not put all the heavy weight lifting on top of the main chain. We should do that on L2 scaling solution, and that's exactly where they're heading. Like they're coming out with rollups, which is basically federated like a sidechain, but whatever. Like I think they're very smart at marketing it. They're very smart at like coming up with new terms for it, but it's like, what is it? It's just L2, like do smart contract stuff on L2. We've said that forever. So environment setup. I think I'll be only setting up the Solana tool suite today. I'll show a few command line. Yeah, I'll show a few command lines about like what you need to do. I'm expecting everyone to be using at least a Linux terminal. So like Unix terminal. It means that you can do this on Mac OS. You can do this on Linux, and I haven't fully tested this on Windows yet. But if you have a Windows machine, you can do this on WSL, which is like window something. Let me change. Cool. So what we're gonna do is we're gonna run a few command lines on top of like our terminal, and then we're gonna have everything set up. So there's a slight difference if you're using M1 machine. I'm currently using an M1 machine right now, MacBook Air, I think like 2020. So yeah, I will go through both processes, and we'll see if like that is a bit too quick or not. So let me stop sharing the slide for 1 second. Cool. So we're at the terminal. I'm using terminal on my Visual Studio Code, but you can use any like Unix terminal. And the commands that we're going to be using is, so if you're new to like smart contract, like you need to make sure that like you have Rust installed in your computer. So the command that we'll be using is this one. I'll leave it in the show notes, or like I'll try to like make sure like everyone has access to this. But so once we hit this command, which I won't hit, but you will have like immediately Rust install in your computer. The reason I can't hit this one is because I'm using M1 machine, and I have to go through a very different process of doing that. So this is a command that you normally would put on your terminal and just press enter, and then you would have Rust installed on your computer. And then just assume that I hit that command, and then this one. So only two commands. This is like the difference between basically like a traditional software engineering and basically like open source software engineering, is that like normally like people out there are already making tools for you to use. So like if you install with these two commands, you will have like a Rust environment that you can actually use. You will have a package manager called Cargo that you can also use to like manage your project as well. And then you will also have Solana. Solana is basically a special program that you can use to create wallet and create wallet and create a local environment where you can test your smart contract that you deploy. So like if you run these two commands that I've set on screen, let me enhance a little bit. Cool. If you run these two commands, you will have Rust environment installed in your computer. And you would also have like Solana. And these two commands, they will also set it up so that you can also just use like commands like this. And this means that I already have like Rust installed in my computer. So like I can also show you what version I have, I think. Yeah, so I have like Rust version 1.56.1. Yeah, so if you run the command, you should be able to like type these two things and like tell me what is your version that you're using. So scroll up a little bit, and I'm gonna pause here for a while, so like we can have everyone, if you're following along, you can have everything set up. If you're not, I'm sure you can watch the playback and then you can follow the two very simple commands. So over here, you can see that the program is being built on, being distributed on Solana.com, and this is the website called rustup.rs. That's also a website that is distributing the Rust programming language. Let me share the command on the chat then. Cool. I'll share the first command. This is Rust. But if you're using M1 MacBook, don't use this command. I'll type a different command. And then install Solana with this command. So that's the two commands that you can use on your normal x86 architecture on your laptop. Do not use this command if you're using x64 or M1. We'll have a different command comes in. So if you can't see the screen very well, it's also in the chat. Yeah. I'll also type the answer there. And I'm sending it in the Q&A as well. Is it in the chat? I think it's in the chat. I've typed two commands. Oh, okay. Let me change. 1 second. I accidentally sent it to only the host. Okay, I sent another message to everyone. Okay, so I typed the command onto the chat, so you can copy and paste it. Yeah. Now I'm gonna move on very quickly to the M1 architecture. The reason M1 is a bit more interesting is that like it doesn't work on it does not work on x86 architecture. Like the programs do not work on x86 architecture just yet. But we have a workaround around that. So I'm going to show you how to do that. But first of all, what you need to do is okay. What you need to do is make sure that like you set up your terminal in Rosetta mode. Now, don't worry, because when I go back to the slides, there'll be a way to set up your terminal in Rosetta mode. So I'll go through that right now as well, I think. I'm going to stop sharing my terminal. So for the M1, I'm sharing my Firefox at the moment. You need to make sure that like you go to your terminal setting. So I'm just gonna go through a little bit quickly on the people who are using MacBook. If you go to the terminal, you can start off with the open using Rosetta first. The instructions a bit on screen at the moment. And if you already had, like, I told you not to install the previous like version, but like if you had installed Rust, like you just did, like make sure to uninstall it using this command, rust up self uninstall. And then I'm gonna copy this into the chat. In your terminal, you need to set up your update to Rosetta to make sure your terminal has like a Rosetta, and then enable it. This is the disable part. Disable. Install update, software update, and then open using Rosetta. So we need to have a specialized like environment to set up at the moment. I'll be a bit quicker now because I'm sure not everyone's using M1. And then that's it. Like after you run this command to set up your terminal using Rosetta, I'm gonna stop sharing this and I'm gonna share the remaining commands on the terminal. If I can find it. Found it. So the first command is the same. Basically, you have to install Rust again using the Rosetta environment. So this is the first command to install Rust. I'm not gonna run it, but like I'll copy and paste it into the chat in a bit. And then you have to install Homebrew. But you have to install it with this command. Again, I will copy and paste, but let me explain a little bit like how this is being done. So at the beginning of this, at the beginning of the command, you see that like we're using x86 architecture on top of like your M1 MacBook. This will only have to be done once, so you don't have to worry to install Homebrew. So like we'll make sure we have the x86 Homebrew, and then you use that Homebrew to install two programs here in the bottom called OpenSSL and Collabs. Again, we'll go very quick because I will copy and paste the commands to the chat. And then finally, because you can't install Solana using command line in this one, you have to clone it from GitHub. I'm sharing the command on screen, but I will share again on chat. So you have to clone the repo from Solana on GitHub, and then go inside and then build it. So like we're basically doing something that like we have to build it ourselves instead of like installing it directly from the internet. This is something that the more proficient you become in software engineering, you have to do a lot. So this is the first step to getting there. And after you build it and install it, you have to make sure that like you have basically it linked to your terminal. So you have to like put the final command in to make sure that like you have Solana connected to your terminal, and then close your terminal, open a new terminal, and then you have Solana ready. So let me copy and paste all of this to the chat. But I'll include it in the slides bit when I give it in. There's a lot of spamming from the chat at the moment. That's just me. Okay. This is fun. This is like the tough part. I can tell you like the toughest part of any single project is actually the environment setup. So we're about done. Let's jump back to the slides and like we'll see what we'll be building today. Because I do want us to like have a project at the end of the day. All the commands are in the chat now for the M1 people. I will be giving out a warning on how to use them because the program that we're using, which is Solana and Solana test validator, that's the command that we'll put on when we run like a local environment network for Solana. is very glutton. Like it takes a lot of space from your computer. So like just me running it for 2 minutes on my computer, it already takes up like 670 megabytes of chain data that's being stored locally in your computer. So this is a fair warning that like you might want to set up it a bit different from I am. Maybe you have like an external hard drive, and then you make sure you put it, you have it there. So the speed of the essence, obviously, like we keep talking about how fast this is, but like it's a very cool thing because like even though it it was not the most interesting thing out there, but like having your environment set up be for the regular people 2 command lines, and for the other people less than 10 command lines to set everything up is something that not only is the network fast, but the iteration and like the creativity of the developers can also be done very fast as well. So I think this is something that is not appreciated enough, but this is a how to get started in less than 20 minutes. Okay, so I have put up the sources for a good tutorial on how to set this up to your environment on the screen. I think you will have a copy of the slides later. So like this is something that should always be a practice when dealing with a smart chain, smart contract development, that you always share your source. So we have like basically a full stack tutorial by one of the very smart engineer with a YouTube channel as well, that you can use using a framework called Anchor. We didn't install Anchor just yet because for our tutorial today, we don't need Anchor, but that's also a nice framework to use for smart contract development. And the article that I showed a bit earlier, it was incomplete. Like I need to make sure that like the second article that's listed on screen at the moment is incompleted. I commented on the article already that you also need to install core utils as well in the command line that we shared earlier. Like it has that already. So if you're gonna follow the tutorial on the page, on the second tutorial on this page, make sure that you also install core utils as well. Cool. Now finally talk about blackjack. Now I know it's fun. I know we just had a coding intermission and we're gonna have it again, but this time we're gonna have it in a way that like it's a bit more interactive. I want us to start program a blackjack game first, command line one. I'm not gonna explain the game. If you don't know the game, you either take a ship to Macau or you watch the movie 21 and then you know the game very well. We're not gonna bet today. This is not financial advice. We're not gonna gamble. We're not like that. We're just making a game. And the reason this game is interesting is because it's a game of probability and randomness. And I think like those two things are what makes games fun nowadays. Like when you go and join a new guild on an MMORPG, like there's a chance that like you get a good item when like you finish a raid and all this. And when you open, like you play Hearthstone, like a card game, and you open a new pack of cards, the probability really does make the game more fun. I'm not very big on loot boxes, but like I think that that's a reason why we find probabilistic games to be more fun than just regular tic-tac-toe. So what we're going to be doing is we're going to use Python first, because Python is a very easy to read language. So we're going to go back to Visual Studio Code, and we're going to try to write a command line Python. We're going to write a command line Python application. And this application will be very simple. I think like it's less than 70 lines of code. It will be playable. It won't be strict. It won't be something that is very, very strict in terms of like game rules, because I don't actually know the game that well. Like I don't I don't play the game a lot, but the reason we use Python first, you'll see in a minute, is that it is a very high-level language. That means it's easier for the developer and it's harder for the computer to understand. Harder means slower, and it's not type safe. And we'll talk about type safety in a bit. It's because type safety is probably the most important, not talk about enough topic in like programming. Basically around 90% of code errors that you see caused by memory issues, and it can be prevented using type safety. And when you are designing like a multi-million dollar like application that's deployed directly to production, to smart contract blockchain, you want to make sure you use as many tools as possible, as many techniques as possible to make that safe. And type safety is one of that. And it's also used by Solana, like a very type safe language. Rust is used by Solana as a smart contract based language. Again, there's also C, but I haven't seen any C application on Solana yet. So I'm just gonna consider that like the only language support on Solana is actually Rust. So we're gonna showcase a Python program and random number generation. And please take note that like it's random. So that's something that we're gonna talk about in terms of like, can we trust randomness on a blockchain? That's probably the most important computer science topic in the current century. Like we don't know how to trust real randomness, and therefore blockchain might be able to solve that problem. But that's very deep level. That's a deep topic, and we don't have enough time to talk about that today. So let's go back to the code. Okay. Okay. So we're gonna start off like this. So like this is like a basic like design of like how to like have like I try my best to like not do like real coding and real time coding, because I just make a lot of like stupid like typos all the time. But I'm gonna try my best to like not make it so bad today. So like this is how you would run a Python command on your computer, like just like this, like go to the right folder and like just type it. Now, if you're using Linux or MacBook or Windows, I'm pretty sure you already have like Python installed in your environment. But just to make sure we're using Python 3, because because no one uses Python 2 anymore. But yeah, so like this is how you would like run a command. You can see like it's being run in real time, therefore it's not being compiled. But like in terms of smart contract, it will be compiled before we publish to the chain. I'm gonna speed up a little bit here because we have a lot to cover still. So this is how you would do it. And the reason we're using Python to show off this case first is because it's a very unsafe language. Now, we're back. So as you can see here, like I just made an array, like it has like two different types of like members in it. So like this is like basically a card deck. We're not gonna care too much right now about like the suit of the card. So like we're just gonna care about the basic value of the card, and we define the number of blackjack to be 21. So like if anyone like goes higher than that number, it's a bust. So like as you can see here right now, like there's almost like zero type safety at the moment. Like I can actually remove the type hint here, and the program will still run the same, because like it's not that kind of program, like it just runs normally. Cool. See, you can run the program fine. There's almost no type safety at all. Like everything's being done for you in real time. So I think this is like a very bad design. So like we're gonna make sure like we're skipping this as soon as possible. So yeah. The good thing about this is also like because everything is also being done for you in the beginning. We can also do a lot of stuff as well. For example, I can just literally just import like a random function right now. And now we have a shuffle deck of cards. And it's kind of interesting because like every time I run this, like it will be shuffled in a different way. So like right now we have like a very shuffled deck of cards that like when we play the game, we won't show this, of course, like because that would be like an unfair advantage to the user. But yeah, like it's easy to like just import like a random function and just like make sure everything runs like that. So I'm just going very quick to make sure like we all understand how the game is played. So like when we start, we pick 4 cards to like be in the hand of like our player and our dealer. And right now, like the player and the dealer have like 2 different cards in their hand already. So like we drew cards, and then we calculate the sum of like the cards in the player's hand. So like at the moment, like I only show what's in the player's hand, and the player's hand only has like 8 number total value of 8 in his hand. So we're gonna keep going, and we're also gonna show what's in the dealer's hand. And how much like his value is worth. However, like because in the dealer's hand, you don't want to show everything, so you only show 1 card. So at the moment, like you only show 1 card, like and I'm not sure which card to show, but I'm just gonna choose the second one to like hide at the moment. So like this is when you start making decision and you input something in, right? Now all of this is actually very easy. Let's check if there's a blackjack first. Boom. Let me make sure the code is easy to understand. It's player sum and it's blackjack, just blackjack. Dealer sum is blackjack, blackjack. Dealer wins. Yeah, so this is something that just a normal game loop would like always check something like this. And yeah, so like if the exit return value is 0, that means that we won. If return value is 1, that means that the dealer wins, so we lose. And let's take turns. Let's take turn to play the game. So we're gonna take turn to play the game now. We know that like we've already picked up 4 cards from the deck. So like we're gonna start out at number 4, and this is the game loop. Where we actually get to type Y if we want to play keep playing the game, keep hitting. And if it's equal to Y, we're gonna get the top card from the shuffle and append it to our player hand. And if it's calculate the new sum and see where that goes. If we're modern blackjack, we're bust. So like if we play again, the game loop is not over, but like Let's save that. And boom. So my total sum is like 15 now. I can stop playing. But yeah, we haven't finished the game yet. So, but if my total sum is more than 21, then obviously the game's over. And yeah, voila, we lost. So let's make sure like we finish it off with like the full game. So you can see how easy this is. Like this is like basically just like I coded this in like half an hour, and like it's super easy if you understand the rule of the game. And we check again if like the user gets inside when to stop. So we're 21 right now. There's no reason to like continue. So we're just gonna stop, and we won the game. So like this is something that is very interesting because like it's a very easy game. It's also very easy to code down in like a local environment as well. But it's a lot harder when you think about it because like it's a lot harder when you actually like have to like make the game type safe and like super safe and like have all the logic made with it as well. So like we're gonna move away from Python now and start talking about like Rust and like how like the same game, even though it looks super easy right now, it's gonna look a lot more complicated on a Rust programming language. And let's just keep going. Yeah, no, I'm not gonna use Python anymore. And I'm gonna create a new Rust project, and I'm gonna use the same folder. So like we already have a Rust project right here. If you have the same command that like if you have the same environment setup that we just did right now, you should have a cargo command in your environment as well. So all you have to do is like cargo init, and then you have like a new Rust project like that's like available in your current folder. I just say cargo init dot, but you can also say cargo init some folder name, and then you have it in a subfolder with that name. So we're gonna move a bit quickly and see if we can try to like remake the game. With Python, it's easy because I can keep adding lines and like removing lines directly on the game. But like with Rust programming language, like it's a lot more strict, and it should be because like if we're gonna use this language to do like our programming on the blockchain, it really should be more strict. So like I cannot just copy lines from like a different program and just like put it in. Instead, like what I have to do is I have to like, well, I have to go ahead and like get some dependency in first. So at the moment, like you should go into like your cargo.toml. Leave that there for a while. Cargo.toml is like I named the project Ledger. So like because it's the name of our talk today. I'm gonna go to the bottom and I import random, like RAND. That's basically the random number generator that we need to use. It's already there for Python, but it's not there yet for Rust because like it's a different architecture. So in order to like make sure like we have the right library, we need to first import this first, and then save it. And then like when we run to play our app in a minute, we'll have random in our dependency. Now let's actually import it in for our app as well. Boom. So the way that we use like Rust is similar to like what we just did right now with Python. We need to like import IO in order to print, in order to like in accept users input, and we'll import a few things like the library that we just like added to our dependency. Right here we define it and we use the right part of it. So that's just the basic import, and we're gonna keep going. Because this one we want it to be a little bit more complicated. We're gonna also define what a card is. Like we're not gonna like create a new class or create a new structure for it. We're just gonna create a new type for it, which is basically like a way to shorthand a class. Now, just because like we're done creating a card for this, we're not done yet. Like we also like have to like create a new function when we generate a card, like basically draw a card from a deck. we're not going to be as strict as like an array that we just made right now. So we're going to go with something a bit more random because we have the random now. So we're going to go to a new function, and boom. I think everyone should be able to see it. So yeah, like we define streets as like 4 things. It can be space, it can be hash, clubs, and diamond. We use a random thing that random dependency we just import right now to create a new random number generator. ing is short for random number generator. It can create a random number between the range of 1 to 11. This is how you do that. And then you also create a random number between 0 and 3, and then select of this from the card. And therefore we already have a new card generator in our hand. And let's move quickly. Since we have a card generator now, like we're gonna go ahead and like teach ourselves how to read the card as well. So like it's similar to like what we just did in Python right now, but it's a lot more type strict. So like mutable, Boolean, card, which is the type we just created. Print line, this thing right here is like a reference. I have a type recommender right here. So like it gives us a hint about like what we're using. And so every single thing that you see right now, it's a lot more complicated in Python. And it will be even more complicated than this when we go into like the smart contract. I'm gonna speed up even more. Okay, let's do this. And we also want to make sure like not only do we want to print it, we also want to make sure we know how to read the value. So like the sum that we just had right now. So like if we have like an array of cards in our hand, like it could be our hand, it could be the dealer's hand. We also want to make sure like we know like the I32, that's integer value of that in our hand. We start from 0 and we sum everything up, and then we return that. Okay, time to actually like have the game loop be used. Let's define some basic stuff like max value, that's blackjack. The dealer stop value. So we're gonna give a bit more intelligence to our dealer at the moment and say that like the dealer stops like drawing new cards when his hand is 17. And hand count is basically how many people are playing the game. We're only playing 1 person. So at the moment, we'll only do that. And then we create the vector. Vector is like an array. Just remember as that at the moment. Our hand and the dealer's hand, it has 2 cards in it. That's almost the same that we just did right now for our Python program. And let's print the hand. Boom. So I think we should be able to run our program now. So like we print the hand, milk slice, blah, blah, blah. Is that dealer? We're gonna print our own hand only. So like we're gonna run this program called cargo run. It's taking some time. It's taking some time because like we also have to like install the random dependency we did earlier. So like right now we have a program that at least tell us what cards we have in our hand, which is the value of 18. And boom, like it took a few lines to get here. Don't worry about this warning right now. We'll pass that later. But yeah, like at the moment we have a program that tells us our hand and everything. And let's do the whole game loop in one go so we can skip to the smart contract like programming. Boom. Let's move this over. Okay, so if the hand value is like not as high as max value, which is 21, that's not blackjack yet. We're gonna keep like accepting the user's input. And like, do you want to hit? If you press yes, you add a new card to your hand. If you press no, you stay your turn. If you say anything else that's incorrect input, the dealer turns like follows you. It's still in the same while loop right here. And then the dealer stops, and eventually at the end of the loop, so like if the while loop breaks, like we check who's actually the winner or who's the chicken dinner. So let's just play the game. Yeah, save it. Yeah. I go run. Boom. So I have a card in my hand, 2 cards. I'm gonna hit. Yeah, well, he busted already. Oh, I might have like made a mistake here, but like basically the game works. We have 2 cards, we have 3 cards, and we're gonna stay our turn. The dealer stop, and we have to hit it. Yeah, we have to hit. So we're the chicken dinner this time because the dealer stopped, but we kept hitting, and we have like 5 cards in our hand before we lost. And this is great because like now we have like a basic like a game loop, but it's the same way with like smart contract as well, because like the way we have to like interact with smart contract. Let's just skip to that part then. Cool. Okay. The basic game loop that we designed right now is available on my GitHub. So I put the link here. If you want to go and like check it out, you can go ahead. Like it's not a very perfect game, but like it tells us that basically like there's a way to design a game. Is that like you can design a game that is playable with just whether or not you want to interact with the smart contract with the program. So like in Solana, actually like the smart contract is also called a program as well. So like we might just use these 2 words like interchangeably, but some games can be played just by the choice of whether or not you want to interact or whether or not you want to like skip your turn. So like this is why it's very interesting, because when we think about it, like we call it supersonic because all of this can be done in a fraction of a second, but also someone else can also be playing your turn as well. So like that's the fun part of like creating a smart contract, is that like we're trading opportunities to like see, we're trading opportunities and risk to see whether it's a good venture to keep playing the game or to stop the game completely. And that's something that I think like we don't appreciate enough just yet. So yeah, it's gonna be quite a fun next 10 years when we see like a lot more like creative design in this. Right now I'm using Blackjack because it's a fast-paced, time-based, very easy to play game. And let's get started with our smart contract. So the basic contract that you see, I'm not gonna show this on screen. I'm not gonna show this on like the code, Visual Studio Code, because I think everyone can just kind of like know the different parts of the program first. This is also Rust programming language, but we're importing a lot of stuff from like a dependency called Solana program right here. I think if it is too small, we will have the slides to share later, so you can look at that thing later. So like the keyword to look at here is like we import a few things from Solana program, like the dependency, and we have like a conversion here because like we want to convert a basic program input. So entry point, this is where the program comes in. Like when we interact with the program without any framework, this is basically the most basic version of this. But when our second example with the Blackjack, we use a framework called Anchor. In order to enter the program, we're gonna like have to share some of our information like pub key and like basically what our accounts are. Like we're not using it, so like we're gonna put underscore in front of it, and we're gonna split the input to be 2 things. So I'm just gonna explain this program that is on screen right now. Is that like if you send the number 0 in, it will tell us what the other numbers trailing that number 0 makes into a single word to be. So like it means that like we can make the smart contract say whatever word we want it to say, and then it will be on the immutable blockchain, forever. So that's a cool part about it, like because like it's like I'm pretty sure like there are people who are making like actually chat apps using blockchain only, and that's like possible nowadays with like this kind of technology. But if it says 1, it won't say anything. It only just say 1. And if it's any other number or any other volume value, it will just tell us that it's an error. So we'll go very quickly with this one.
I see it. Yeah, I think the whole section is a bit overrun, like overrun a bit now.
So
Yeah.
what I'll do is I'll do another 2 minutes of like
Yeah.
the program we just installed and to show us like how like I would normally do my work.
Yeah. Okay. Yeah, what about let's make it 3:40 for the whole sections, and we get into Q&A. Yeah.
Cool,
4
yeah.
minutes. Okay.
Okay, so I won't go too deep into like what the contract does, but like it's very similar to what we just did right now. So what we have right now here is that like some game logic. We need to do this in order to like deploy a contract. This is basically my public key that like when I deploy the contract, it will be transferred to like this public key. This is the app. We initialize the game with like the player with 2 cards, the other hit 2 cards as well. This is the game loop right here. So like when we send a command into the when we send a command to the program, it will come to here, but it will also go through a few things here first. Like, hey, if the player sends in hit, like, do we have to like validate all that stuff first? Because like smart program, like we need to make sure like we validate all of our inputs first as well. So at the moment, like we're not really validating anything. This is the game, how it started. It started off with like a round. We have like a player hand. So I maxed it. I make sure that the player hand can only hold like 5 cards. So as the dealer hand as well. Check if there's any winner and all this thing. Player hit or the dealer hit. So that's the game loop, and we're just gonna use the programs that we install right now. So the first thing I'm gonna do is I'm gonna launch like the test validator. So like that means like right now in my computer there's already like a small Solana virtual network running. So just assume that we have Solana running on our computer already. It's gonna take a lot of space in your computer, so like that's something to be careful about as well. So let's do Solana config set URL localhost. So make sure that we're using localhost. So like when we do like the Solana contract deployment, we're gonna deploy in our local computer. Build our program. So like cargo build BPF is something that we do to like build our program, and then immediately 1 second. Okay, immediately deploy it. So like we build the program, we're gonna deploy on our smart chain local environment. Okay, we now have like a program ID, which is great. We're gonna use that in a different so I don't have like a front end for this as yet. So like what I do is like I create another smart command line. So like we're gonna see if there's any log on this, and boom. So I go to my CLI folder and I hit, and done. Like this is the fun part about this. Like we see all of this like in real time. Like so anything else that happens on our smart contract as well, it will happen right here that you can see in real time. Like if I say message anything like message as a hit, a message as a stay, then it's done. So like this is all like my battery's running out, so I should really finish this quickly as well. So that's all there is to it. Like I'm gonna stop sharing now, so maybe you can start with the Q&A.
Yeah, back to my part. So thank you, Sid, for presenting such informative content. And for me, it's quite interesting to seeing you do this blackjack and smart contract coding thing. So I hope all the online audience enjoy this presentation from Sid. So now we will move on to the Q&A sections. If you got any questions about the content just now Sid present in the workshop part 2, you might drop your question in the Q&A with the Q&A button. So, I already saw a few questions. Okay. So first question for Sid. what are some popular platforms for developing blockchain applications?
Popular platform. So obviously Ethereum is one of it. Like if you want to use Ethereum, like there are a few framework. Framework is basically like what we've been doing for the whole talk is like set up like a framework so that like when you come in, you press a few command lines and then it becomes deployed to the blockchain. So at the moment we config set to localhost. So like whatever I deploy will be deployed locally in my machine. But I can also set config to DevNet. It will be deployed on the DevNet. It will be deployed on the testnet, and then we can share that with anyone else. Or if you have Solana in your wallet, you can also deploy on mainnet as well. So for platform, I'm gonna consider to be framework. For Ethereum, there is Truffle, there's Hard Hat, there is Brownie, which is my favorite because I'm a Python programmer. There is also quite a few others. But for Solana, there's only one at the moment, which is called Anchor. Anchor is made by Project Serum.
Okay, so pencil down like Brownie and is the favorite of Sid. Oh, I saw a meaningful question. Yeah, okay, I will send it out here. So how is double spending prevented? Let's say that two users use the same keys and spend the same funds at the same moment in two different parts of the world. And address A send one Solana to address B, and in the same moment to address C. So what happens if two blocks with same spending are created in the same moment from two different computers?
So I just want to say like the example is not really double spending. The example is basically like if your private key has been breached by someone else, so like they also have the same fund with you. So like obviously that's not double spending. Double spending is when one wallet address send it twice, right? Like but like from the same person, like try to like do that. One of them will get rejected because like double spending is what blockchain is made to be against. There are some ways to make sure the double spending pass, but like it takes a lot of like power to like hashing power to like make that happen. And in Solana, like we're just gonna answer for Solana at the moment first. In Solana, it doesn't happen because of that long and boring VDF that we were talking about earlier, the verifiable delay function. It makes sure that like you can't double spend. So like it fixes the double spending problem, and it also fixes the censorship resistance problem.
Okay. I will pick two more questions, then we can move on to the networking section, I guess. So what kind of knowledge should I learn if I want to change a job from backend developer to blockchain developer? Can you share your experiences?
Prototyping. I think like the toughest part for like backend engineer is that like they don't get to try out new framework. Again, no headaches, right? Like if you don't have to try out like a different like type of like front end framework, you also don't have headache as well. But you should. Like the headaches are actually like really good like learning experience. So like if you're a good prototyper, like someone who can actually like start a new project in a very short amount of time, that means you can start many new projects in very short amount of time. So like prototyping is the most important skill in smart contract design.
Okay, prototyping skills. Okay. Okay, where do you usually deploy your dApps to?
Okay. For Solana, I just deploy directly to DevNet because we like my company, like we're interested in like launching something that I cannot talk about yet, but like we'll be deploying a lot of smart contract on like the mainnet anyway. Because in terms of like having a quantitative finance, like we know that like there's something that beats Solana at the moment. Like the network effect might not be there yet, but like the technical background is super strong on Solana.
Okay, I think that's all for the Q&A sections. Although I noticed there's a few questions left here, but the schedule is quite tight for us. So let's move on to the networking sections. I will enable the chat room functions now. So if you are interested, all the online audience, you might insert your questions, or you may conversate with Sid through the chat room functions. Okay, so please make sure you click the chat button to insert your chat. And for Sid, please make sure you send it to everyone if you are typing messages.
Okay.
Yeah, but you may also answer it through the audio.
The Q&A, right?
Yeah, you may look at whether there's any audience try to conversate with you now in the chat room function.
Okay, chat room.
Yeah.
Cool. Why Thailand? No love for Hong Kong. I came back to Thailand right before COVID, and I couldn't fly back to Hong Kong. Actually, I still like most of my friends are still in Hong Kong. Like I haven't hung out with high school friends in Thailand for so long that last time I hung out with them, like it was super weird. Okay, should you buy Seoul? No investment advice, so cannot answer that. That's 2 questions down. Let me go to the Q&A section. How do you get the liquidity of a trading pair? That's probably not for me. How is double spending prevented? What's the knowledge you should learn? Okay, cool. I think we answer most of the technical Q&A. But yeah, Hong Kong is amazing. Like I cannot value my time enough in Hong Kong. Should you develop on Seoul? I think so. But it really depends on like what kind of projects you are interested in. I have 2 more slides in my presentation that tells you that like actually like there's a lot of like GPU cloud computing network that is moving to Solana. Basic attention token, that's a very famous cryptocurrency project. They're also moving to Solana from Ethereum. A lot of stable coins are moving to Solana. So like there's a lot of stuff that is being done on Solana. Cool. Can anyone just mine Solana like they do with Bitcoin? Yes, but it's very expensive to mine Bitcoin. It's very expensive to mine Solana because it's not technically mining. You're joining the validated network, and from our experience, like from our company, like the hardware specs is one thing, but the worst part of it that you have to pay for if you're doing it on the cloud is you need to have a computer that is 30 Mbps. The bandwidth that is like 30 megabytes per second at all the time. Otherwise, you can't catch up. So if you have access to like really fast internet speed, which Hong Kong people do, I think it's a good option. In Thailand, it's actually like more expensive for like internet speed here. Let me keep answering a few more, maybe 3 more. Network conditions. Up and coming thing also rival ETS. Okay, rival ETS. When you talk about like rivaling ETS, like you have to talk about like the community background, because no matter which like blockchain project you're talking about, it will take years of development. So like if you have a weak community, if you don't have any attention at all, you don't get that. And I can tell you from personal experience that there is a lot of interest in Polkadot in Thailand. Because people are more interested in NFT than the network itself. So like there's a lot of NFT on Polkadot. Therefore, Polkadot, which is also like another Ethereum founder who break off, is something that you should pay attention to. Up and coming network, rival Ethereum, Solana. Can we do all of this in Amazon Web Service or any cloud? Yes, you can. But this is the difference between like above the API and below the API. Like the gap widens if you do it on a cloud. Like if you do it on blockchain, this thing becomes like easily exchangeable. Best way for the dApps. Any on the start transaction? Still need centralized cloud solution to make dApps work. The good thing about dApps is that like they're usually very lightweight. So like even if you have to rely on cloud, you can also use it like serverless, right? Like you can make it as cheap as possible. Like I don't think a world where infrastructure like centralized infrastructure is never needed will happen. But a world where you use it as little as possible and you also don't give it any more value, like you don't give it any more traffic than you need to, you can do that. So like maybe don't try to like handcuff yourself and like give yourself a hard time. If developing on cloud is easier, just do it.
Okay, thank you, Sid, for presenting for us. So informative
so much.
content, and also I think the audience enjoys asking your questions and also like share their thoughts on Solana with you. So that's the end of our part 2 workshops, and we will now have a 10 minutes break. So upcoming section will begin at 4 o'clock, I think. So you might take a water break or toilet break now. See you later. Hi, welcome back to the part 3 of today's workshops. So in these sections, we will learn about the DLT, distributed ledger technology, get to know more about what the DLT that enterprises are using nowadays, what are its characteristics, and how are they being adopted in different finance system and activities. So our speaker will introduce you about the enterprise blockchain development, different transaction examples, maybe some items of how to refund on the blockchain network, and followed by Q&A and networking section. So when we talk about DLT for enterprises, I will first pull up in my head about the issue related to the security level of chain or such technology. So is there any blockchain security system that grant additional protection to it? Example like assets or actions that are only allowed to identifiable participants within the chain. So let us introduce our guest. He's today on site with us to present to all of our online audience. Tony from CryptoBlock, the head of engineering of CryptoBlock. Okay, let's welcome Tony.
Thanks. We're from the enterprise world doing blockchain and DLT solutions. So it's kind of, I guess it's kind of new to most people. I didn't know about this before I joined the company either. So hopefully I will be able to give you guys a glance of how blockchain and distributed ledger technology could help in an enterprise application, right? So we're at CryptoBlock, and we've been dealing with customers from the finance industry, from insurance, even governments. And yeah, a quick intro about myself. So I was firstly joining CryptoBlock as a engineer, especially on backend technology and also on the blockchain bit, right? And then later on, we kind of I kind of got more involved in meeting clients and kind of promoting the goods of DLT and being consulting to why these enterprises, right? So I have been involved in some projects in the past on trade finance, on central bank digital currencies, especially with Bank of Thailand, the Central Bank of Thailand, and also HKMA, that's the so-called central bank in Hong Kong, right? And yeah, today I will be going through these 3 topics. So I'm sure the previous 2 speakers have done a pretty good example of explaining how permissionless blockchain would work, and also its applications. So I would like to explain how permissioned DLT would work by comparing it to the permissionless technologies, right? And later on, I'm gonna go into some of the applications of DLT within enterprises, and later on we'll take a deep dive into one of the permission technologies called R3 Corda, right? Okay, so when we look at when we look at DLT technology, so DLT is actually a broader term than blockchain. So there are some chain technologies that doesn't have a concept of blocks. So having blocks is good. The data size would be smaller, but yeah, with the chain and the chain of hashes, you can actually generalize the concept into DLT, distributed ledger technology. And these DLTs are actually solving one issue, right? It's trust. If you look at Bitcoin and Ethereum, we're basically removing like central authorities on finance and the finance infrastructure and also governments out of the capital market industry, right? So by having a decentralized way of holding assets, we gain more trust. We gain more trust on ourselves, like we're the ones holding those assets, right? So within permissioned DLT, we're also solving the problem of trust. But if you think of the concept of cryptocurrencies, the asset is kind of like cash. But if we generalize the concept of assets into maybe contracts, future contracts, options contracts, stocks, or even like trade contracts, invoices, purchase orders. Basically, we're holding these assets in a digital form and in a trusted way. So there are three types of ways you can leverage DLT. So one would be on the permissionless way. You have a really decentralized world with anyone could come onto this network, and we'll just share our assets on that network. Right. And going into a permissioned way of network, you're kind of like granting people permission into the network. So not everyone can get into the network, but still there's the part where people share the ledgers, right? So there's still some type of decentralization, although it's now seems more centralized, but still it's better than entirely centralized, right? And the last time would be just to merge these two types of solutions, right? You have permissionless and permissioned technology helping out on the application, right? So within an application, there might be different types of assets, and different types of assets would require different level of privacy, right? And then with this concept, you kind of can take reference, you can leverage the permissionless and permission blockchain within one application. So one good example of technology that's been built on the market is Quorum. So there's a chain technology called Quorum, and it's actually a permissioned version of Ethereum, right? So you can see that people are like kind of like tweaking these technologies into permissionless and permission form, just to support for different types of use cases and different levels of security and privacy. All right, so yeah, so I'm gonna talk about the designs of permission DLT by comparing it with permissionless technologies. Right. So if you look at the permissioned technology, usually within a network, you have identities representing enterprises. Whereas in Bitcoin, Ethereum, those permissionless technologies, it's the end users that's holding the wallets, right? So each wallet would represent one individual, for example. But in permissioned world, you kind of have identities representing enterprises, entities. So one public key would probably map to one enterprise. Right? And the network size also varies quite a lot. Right? In permissionless DLTs or blockchains, you have a network size that's really, really huge. And because anyone can come onto the network, and people come onto the network for different purposes. Someone mines, someone holds assets, and some nodes are like archives, right? But in permission, in the permission world, the networks are usually rather small. So only the participants that are working on this application will join the network. So for example, if we have a banking application, you probably would see only HSBC, Standard Chartered, ING, like the major banks on the network. But still, the network wouldn't be of size 100 or thousands, right? So to solve, like, this is kind of like a different set of problem for permission chains to solve. And that also affects how it's eventually being designed. So when permission technology has like identities representing enterprises, the way we store the public keys the way we store the private keys, and also the location where we store the private keys would be quite different. In Bitcoin and in Ethereum, you have user wallets, and these wallets can be on your mobile phone, in your PC, or in some other places in a USB, right? But in permissioned world, we actually have these systems holding these keys. So the keys can be in some virtual machines, probably just saved as a file in your virtual machine. It could also be in HSMs. So for better security, right? HSM stands for hardware security modules. So it's kind of like a specialized hardware for holding keys, right? And from the different size of the network, permissionless technologies having a huge network, you kind of have a really decentralized consensus algorithm, right? So for Bitcoin, Ethereum, you have proof of work, proof of stake, but in permissioned technology, you don't have like a huge network for you to run these decentralized consensus algorithms. You can easily fall into the 51% attack if you run PO, proof of work, right? So if you have 10 nodes on the network in total, you only have to compromise 5 nodes to actually collude compromise the network. So in permission chain, the consensus is usually somehow centralized, somehow decentralized. But still, it's trying to solve the security issue in a small network. All right, so maybe let us talk about the consensus a bit more, because that's kind of like the core to how secure a DLT network would be, right? So as mentioned, in permission DLTs, the network is small. You cannot enjoy you don't enjoy the goods of having like many participants holding ledgers. So some techniques being adopted in permission DLTs to solve this small network issue is to have like voting mechanisms. For sure, in permissionless technologies, there's also some consensus algorithms working in the same fashion as having votes. But in permission DLT, it's more intuitive. It's really like majority vote, right? And also in permission DLTs, we are trying to solve the issue of privacy. So for example, in Corda, the ledger could be within a network, there could be multiple ledgers. Whereas in Bitcoin, Ethereum, there's only one ledger holding all the transactions. In Corda, for example, we have multiple ledgers holding different assets. So only the relevant parties to the transactions would be holding the transactions on their ledger. So in some sense, it's like having different shards of ledgers being visible to only the relevant parties. And with this is designed, when you do consensus, when you agree on whether the transactions are valid, only the relevant parties validates. It's pretty straightforward as well, right? And the third technique that's been seen in Corda, in Hyperledger Fabric, one of the other permissioned technology, is to separate contractual validation and uniqueness validation. So by contractual, I mean the smart contracts would have to validate those transactions, right? So if the smart contract says yes, it's valid, then it's kind of valid. But still, there's the issue of double spending, right? So that's the uniqueness validation. So in Corda and in Hyperledger Fabric, there's a dedicated node or a dedicated cluster of nodes that are validating the uniqueness, or in other words, to prevent double spending on this network, right? So by separating contractual and the uniqueness validation, the relevant parties could validate the contractual correctness, and there would be a dedicated service to validate the uniqueness. So in Bitcoin and Ethereum, the consensus algorithms are mostly focusing on solving the uniqueness, to prevent double spending, right? But in the permission world, we usually have a dedicated cluster or dedicated service for preventing double spending. So that's how it tries to trade off between privacy and the correctness and integrity of the network. Right. So let us go into more on the applications of DLT in enterprises. So from our company, we actually do a lot of different applications in different industries. So we have merged these different applications and kind of conceptualized how DLT would actually work in enterprise applications, right? So here's what we've summarized in our 4 years of working with enterprises. So in DLTs, you have distributed ledgers, you have smart contracts, and the distributed ledgers are really to allow the participants hold their own data, so trust your own ledger, right? And the transactions in the ledgers would be signed. And we also have smart contracts, which is a universally agreed code, a piece of code, where you can generalize your business workflows, right? And so you have unified application logic, and you can also unify the fields, the data that you kind of put onto the chain, right? So with these two concepts in mind, when we take it to the enterprise applications, the first good thing you will have is when these enterprises start hosting a node that represents themselves and to transact, they kind of have a digital identity on the network. So all messages or all transactions or data being shared would be kind of signed and would be sent out from the actual source, right? So if we compare this to traditional workflows when we do trade finance, for example, so you send out your invoices and your purchase orders through email, but how do you actually make sure that the person sending, how do you make sure that the email is actually coming from the correct entity, right? So having this DLT architecture kind of forces the enterprises to have their own digital identity on a network. The second good thing to have is when you have smart contracts, you kind of dictate how a business workflow must be done, right? So usually the corporates, usually the DLT technology would be applied in multi-party workflows, right? So if you run a DLT application, but you only deal with your internal processes, it's really not very interesting, because the digital identity you have would, like, you basically own the system, right? So you can do those controls through that system. You don't have to leverage DLT for to complicate things, right? But with the DLT framework, with the DLT architecture, these cross-entity communication can be secured and can be traceable and auditable, right? So usually the DLT layer would be handling all these multi-party workflows. And when you start digitizing these multi-party workflows, you get automation, right? So these use cases, these characteristics can be later on put into industries where there's where usually multiple parties are being involved. So in trade finance, for example, if you look at open account trade finance, you have corporates applying for loans from banks, right? But they apply their loans by providing their invoices, their purchase orders. So if you can have your supply chain data being digitized already, the banks would have a really good idea of, would have an authentic copy or authentic digital copy of your trade records. So it's easier and more secure for them to give out loans. Also in the CBDC, especially in the wholesale CBDC, central bank digital currency industry, people are usually solving the problem of settlements. So bank-to-bank settlements or settlements within the country, right? So usually we need to, different banks would have to agree on the transactions that's being done within the day, and they'll try to run a netting algorithm to simplify the payments, and then they'll do the transfers, so interbank transfers. Because you won't imagine, like, when I transfer some money to from HSBC to Standard Chartered, another user at Standard Chartered, there won't be a van really carrying those cash from HSBC to Standard Chartered. So usually they settle in a maybe day end or sometime, but in fact that's not very efficient, right? And not secure. So DLT would allow banks to do interbank transfers real time by running their own nodes and doing settlements and nettings real time. So here I'd like to share to you guys a workflow that's currently happening in one of our products called Atlas Elite. So Atlas Elite is an open account trade finance workflow engine, you might say. So within this product, we have corporates and financiers hosting their nodes, and we're also having like third-party information providers like shipping companies or insurance companies to be able to authenticate some of the documents being shared from the corporate to the financial. So let us look at this financing workflow. So the objective of the corporate is to apply for a loan from the financial, maybe to manufacture cars, right? So you can imagine when the corporate, let's say Honda, right? So when the company gets a purchase order from a distributor, they'll send over the purchase order to the financier, right? So the financier would be able to verify whether the purchase order is valid, And in that case, if the purchase order is already digitized on the platform and maybe being signed by the distributor, the financier would have a better idea that this copy would be the true copy. So they will probably go through a less complicated due diligence process, right? So the financier reviews that digital form of application and also the trade documents. And if the financier requires like more supporting documents from the corporate, the financier would send over another message to the corporate to request for supporting documents, right? And in this case, in the workflow, perhaps the financier is requesting for the shipping document. So whether as a proof to know that whether the shipping is valid, right? So now the corporate would request the shipping document from the shipping company. So if we have a network that's digitizing these workflows for shipping, then the signed copy of the shipping document can then be shared over to the corporate. And the corporate would then be able to share that to the financier. The financier would then be able to see, okay, the shipping document has the signature of the shipping company. So the financier wouldn't need to actually call the shipping company and ask for confirmation on this again. So they'll just recognize the digital signature. And then when the application is being reviewed, they'll make an offer. And the corporate would then also approve the offer, right? So within this workflow, there's like three parties: the corporate, the financier, and the shipping company. And in fact, before the corporate actually applies for finance, there might be the buyer of the corporate also on a chain supplying these documents digitally and with signatures. Right. So it's kind of like sharing documents in a digital way and also in a secure way. So basically to remove frauds and possibilities to forge documents. All right, so let me share to you guys what our company is working on. So we're trying to we're trying to publicize or to promote the idea of having cryptography in the real life workflows, right? So DLT is actually one way that's natively having this attribute, right? So imagine in the future, you won't be sending documents through emails. You will only be sending your documents through blockchain. How good is that, right? Everything is digitally signed, and basically frauds would be removed. And there's a good opportunity for enterprises to start digitizing and digitizing their workflows and documents and data, right? So throughout the 3 to 4 years of CryptoBlock, we have been building applications you're seeing on the right. So we have Midas in the insurance space. We have Atlas Elite in the trade finance space. And we have Themis on certificates, Topaz in construction, and many, many others. So these are all our products we have been building and we have built. Right now we're kind of working towards another ideal, right? So we have this idea of Kentro. So Kentro is the Greek word for center. So in DLTs, obviously, or in blockchain, obviously, the network would be quite essential, right? If you have a bigger network, people would, like all participants would be able to transact easily through the protocols that's being set in stone within the network. So we have been building these products in the past, but in fact, they're kind of built into their own networks, right? So Midas has its own network of insurance companies. Atlas Elite has its own network of corporates and financiers and banks. Themis has its own network of education institutions, Topaz constructions, but really these different companies, they should be brought onto the same network, right? Who's there to say there's no possibility for maybe a construction company to apply for a loan, right? Who's there to say within the loan process, some insurance documents would be required? For example, in the food industry, usually when you ship out goods, ship out your food, insurance, like some kind of insurance guarantees would be required, right? So we are trying to put together or to merge these networks into one, of course, without compromising the privacy of these data, but really to open up opportunities for people to transact and to open up doors at the very early stage for opportunities for corporates to transact in a secure way. And yeah. So this is another illustration of how Atlas Elite works on Kentro. Right? So Kentro would be the network. It would be the DLT enabler for corporates and enterprises. And these different types of parties would come onto the network, whether they consume data or they supply data for these different workflows. The main users of Atlas Elite, the buyers, suppliers, and the banks would then be able to leverage on all these different types of authentic data, right? So other than the private sector, we're also operating on some of the public sector applications. For example, you can see on the bottom, we have, we're working on a academic credentials platform, basically like graduate certificates, transcripts, and so for the Hong Kong Joint University Computer Center. So you can, if you're, I'm not sure, but if you guys are still studying now, in the near future, you'll be having your DLT or blockchain, blockchain version of graduation certificate, right? Also in central bank digital currency, as mentioned, we had worked with Bank of Thailand and Hong Kong MA on cross-border payment solutions and also central bank digital currency. And also on trade finance, right? We were on Atlas Elite, building open account trade finance, digitizing the workflows for trade loans. And we were also working on a trade finance product called Contour. So Contour is a digitized version of letter of credit. So it's also one of the product lines or financial products under trade finance. And it has many of the major banks on the network already trading. So we have HSBC, Bangkok Bank, Citibank, ING, BNP Paris, CTBC from Taiwan, and Standard Chartered, and so. And the network is growing, right? So that's basically the applications in DLT. So now I want to go into more on the technology side. We are operating quite many applications on R3 Corda. It's one of the most popular and permissioned technology in the market. The other one would be Hyperledger, Fabric, and Quorum, right? So we're using Corda because it has like more privacy guarantees. Just as I mentioned, people who are actually relevant to that transaction would have visibility and others won't. So it actually works, or this property actually works better with banks, right? Or financial intermediaries, to be specific. So we have been working on Corda for 3 and so years. And recently I just found on their website that they're also calling their technology a multi-party application. So that kind of aligns with our idea of permission DLT. So it's pretty interesting to see that, okay, we have been working with R3 Corda for the past few years. They were calling themselves the giant in the permission world of DLT and selling security, privacy and stuff. But now that they also came together on this concept of multi-party application, it's kind of like a guarantee to what we're what we have, the idea we have on permission technology. So yeah, so let us look at the few concepts, the key concepts within Corda. So the first one on the left, we have the ledger. So, sorry, actually, I'm gonna take this analogy of a database application to Corda. So in fact, these different concepts, the ledger, the state, the transaction, and contract, they can actually be mapped to how a SQL database would work. Right. So the ledger itself would be the database, the storage of the transactions. You also have the state. The state would be the data that you're actually storing. So in the illustration here, the state actually has the so-called IOU state would be, you can imagine it as the IOU state table, right? And the columns in the table would be from, to, amount, due, paid, penalty, and the values would be Alice, Bob, $10, and so on, right? And the next concept would be transaction, and this is pretty much mapped to database transactions, right? So you have in database transactions, you begin a transaction, you start operating, doing write and read operations within the transaction, and you commit. But within the transaction, if there's something wrong, you actually roll back the transaction. So all the operations within the transaction, either all commits or none, right? So in Corda, transactions are the same. So we put states into transactions, and basically they will all be committed to the ledger, or none will, right? And finally, the contract. The contract would be like an application code. So if you're familiar with web programming, you might know MVC, so model view controller. So the model would be the storage layer, the database, and the controller would be like the application server code, right? So the contracts are basically the application server. So you write all your business logic there. You kind of code in how a transaction would be formed, right? How a valid transaction would be completed, right? So let us go into these concepts in detail. So states are data, they are tables, and in tables we have columns. So the first thing we'll look at is the data fields, right? So each state would have its own data field, but within a DLT application, we have smart contracts that dictates how these data fields would be defined and what the validation would be for each of these fields. So we actually have to have the contract reference for the state. So we will tell the DLT engine or the validator knows that which contract would we want this state to be validated on, right? And finally, the participants, like who will be seeing this state. Within the multi-party workflow, for example, in the example I just gave, we have the corporate, we have the financier, and we have the shipping company. So when we have the application, the financing application being put to the ledger as a state, in fact, that state should be only shared between the corporate and the financier. And the shipping company doesn't need to know about this transaction, right? So in the participant column, we'll just put down the corporate's name and also the financier's name. Well, in fact, it's the corporate's public key and the financier's public key, right? Going up to the transaction, right? So the transaction encapsulates multiple fields, multiple states. And within the concept of DLT, you know that the transactions are append only, right? So even if we want to delete some data on the ledger, it's not, we can only mark as delete, right? So the transactions would be appended, but the data that's being governed within these transactions can be marked as, could be created or kind of consumed. So Corda actually takes this concept as well. So on the left, you can see there's an IOU state and a cache state. On the right, you also see an IOU state and a cache state. But these two states are, from the left to the right, it's actually an evolving of the state. So you consume the IOU state and the cache state on the left, and you generate a new set of states on the right. So you can see that this transaction is actually a transfer of an IOU state, right? So on the top left, you see the IOU state is owned by Alice, and on the right you can see, on the right, you can see that the IOU amount is being deducted to $5. Right? And on the cache state, you can also see that the owner of the cache was changed from Alice on the left and to Bob on the right. Right. So now the cache state is basically like a UTXO in Bitcoin. So Bob can now hold a unspent state of the cache, right? Whereas Alice, her cache state was consumed, so it cannot be used in another transaction again, right? So within the transaction, there's also some metadata. For example, the signatures, right? The signature of Alice. In this case, I believe we only need Alice's signature. But of course, we can include Bob's signature if Bob has to agree when Alice pays Bob. That depends on the application logic. But I think in this example, it's safe to say that only Alice needs to sign, right? And there's also the time window, right? So the time window really is the timestamp. But in a decentralized system, we know that time cannot be exact on different systems, right? So in fact, Corda uses this concept of time window to pin down a range of a range of time, so that the transaction must be happening within that time range. Next, we have okay. So this diagram is to illustrate the idea of consuming of states, right? So the database, the transactions in Corda are actually the unit of storage in the ledger. So in the ledger, you won't be storing states. You will be storing pieces of transactions. right? So and the concept is working similar to database transactions. All the states would be committed or not, right? And on the right, you can see there's two arrows being pointed from the rightmost transaction to the left two transactions. And that's to illustrate the idea of consuming of a state, right? So on the transaction with hash 95FD, the state 2 will be consumed by the transaction on the right. And the transaction with hash ODBF would have its first state being consumed and consumed by the transaction on the right. So that also means that these two states won't be able to be used in later transactions. So they can only be consumed once. And as mentioned earlier, this is the uniqueness guarantee of Corda. So basically to prevent for double spending. And in Corda, there's the concept of notary. It's a cluster of nodes, or it could be a single node that's validating the uniqueness of the states. So it makes sure that all the states will be consumed only once. All right, so finally on the contract, that's the meat of the DLT applications, right? So the contracts would actually validate how these states be involved. So in this example here, we have a transaction in the middle having cash 0 being consumed by cash 1 and bond 1 being consumed by bond 2, right? So you can imagine the ownership of the cash 0 would probably be Alice, and cash 1, it evolves to cash 1, where the ownership would be transferred to Bob. And on the bond side, it should do the reverse. So bond 1 should be owned by Bob, and bond 2 would be owned by Alice. And the application code, the contract, would basically dictate or basically validate whether cash 0 and bond 2 are of the same owner, right? And bond 1 and cash 1 should be of the same owner, right? Because the one who's transferring out cash should receive the bond, right? So in the contract, you can see that there's if you go into a Corda smart contract, you would see lines of validation codes dictating this should equals to that, or this should be greater than that. The cash balance should be greater than 0, for example. And it will also govern that whether, like, how a bond trade would be shaped, right? So a bond trade must have cash being transferred and bond being transferred. So those application logics would be set in stone within the contract and deployed to all the network participants. So everyone would follow the rules that's being written in the contract. And if someone violates the contract, then that transaction wouldn't be accepted by the relevant parties. So the contract really validates for contractual correctness. So that's to remind us that the transactions must be contractual valid and also uniquely valid, right? And finally, there's a good property of, or I would say it's the unique design of Corda, to have need to know only visibility, right? So instead of having a global ledger that's shared across all the nodes, in Corda, actually only the relevant parties would share a state. So for example, in a previous example, an application, a finance application, would only be owned by the corporate and the financier. So it's segregating these data by it's achieving privacy by simply segregating the data, right? But this, of course, in some cases, when you have a tri-party workflow and the state is being shared by 3 parties, it's much more easier to collude, right? If 2 of the parties decided to commit a fraud and to trick for the 3rd party's money, then yeah, they can simply do that. But so then it falls back into how the smart contracts are being designed for parties to avoid collusion. So in some sense, you can say that Corda by design allows for better privacy, but on the other hand, the security of the smart contracts would require a higher level. So in the diagram on the right, it basically says that, for example, Alice and Bob, they would share the states 1 and 7, but Alice won't be able to see the state 6, for example, that's owned by Bob. Right, so let me just quickly go through the typical architecture for a Corda application. So on the right, you can see that each gray box would be one entity, right? And they will be hosting their own nodes. And these nodes would be transacting on the internet through these secure workflows and secure smart contracts. And these Corda nodes would also be having their own database for the actual storage. So if we go into more details into the architecture of one node, you can see that the Corda node in the middle would be transacting on the outer network. So they will be transacting with the peer nodes to the notary nodes and also the network map, which serves the purpose of peer discovery. And on the right, you have the SQL database. That database would be storing all the data that's owned by the Corda node. So you will have the transactions, and that aggregation of the transactions would form the ledger. Likewise, in Bitcoin, there's the UTXO set, where you can have all the unspent states being stored in a cache, so you can easily refer when your application needs to. So Corda also takes the same design of having a table of unspent states. And later on, you also have the private keys being stored in the database. You also have the node identity, the peer node identities being stored in the database. And in Corda, because it's working for, it's designed for enterprises and financial industries. So the private keys can actually be hosted in HSMs, right? So they have the flexibility to work with HSMs, right? And a Corda node would be like the application server for DLT applications. So it would run the contracts. It would run something called the flow. So flow is another bigger concept in Corda. So it's like the application code, but that's not being shared. That's not being shared and agreed on universally, like contracts. So contracts is universally shared, but flows are not. So you can actually customize your own flows and leverage or manipulate the contracts according to the needs of your organization. And on the other side, we have the application servers that's acting as the regular HTTP server to serve the end users with a UI or with APIs, basically. So it's like the middleware for the end users to transact with the Corda node. And one thing I want to mention is that the flows in Corda actually enables peer-to-peer messaging. So you can actually send data that's not being committed to the ledger between nodes So let us look at an example here. So if we want to do a stock trade, there's the buyer and seller on the network being the nodes. There's also the FX rate provider, right? So we want to buy US stock with Hong Kong dollar. So we must obtain the Hong Kong dollar to USD rate so as to execute the trade. So the FX rate provider could also be viewed as an oracle. It's just providing data for these transactions, right? So let us look at the workflow now. The buyer initiates the stock trade. The seller would gather the input states of US stocks because it's the seller of the stocks, right? So it would have the stocks being tokenized as quota states. And later on, it would request for the Hong Kong dollar to USD rate from the FX rate provider. So the reason why we need peer-to-peer, the reason why we need this workflow here is because the buyer might not trust the rate that is input by the seller, although the seller is obtaining the rate from the FX rate provider. So here's what Coda, the bottom section describes how that issue can be addressed, right? So once the rate is being obtained from the rate provider, the seller puts that rate into, it converts the rate into Hong Kong dollars and put that into the transaction. And then it gets the buyer to gather its own Hong Kong dollar states, who is the owner of the Hong Kong dollars, and it starts building a transaction and it signs. Right? So before the transaction commits, we actually need the FX rate provider also sign the transaction, so that the buyer can be guaranteed that, okay, the FX rate provider actually agrees that this Hong Kong dollar to USD rate is correct. So later on, that signature is obtained and sent to the buyer. The buyer verifies whether the FX rate provider, the oracle, has agreed that this Hong Kong dollar to USD rate is correct. If it's correct, it signs, right? And then it sends back the signature to the seller, and the seller commits the transaction and puts this transaction onto the buyer and the seller's ledger. Okay, so I think that pretty much sums up all I want to share today with you guys. If you are interested in the technology in R3, you can go on to Corda's official document on the key concepts. Definitely check out that, and you can also look at some simple codes. That's usually quite convenient for you to understand how these contracts are being written. Corda runs on JVM, so obviously we use Java and Kotlin. But I do recommend, if you haven't checked out Kotlin, please do. It's a fabulous language. It's a general purpose one. You can also write cross-platform code, for example, JavaScript using Kotlin. And finally, there's a new project coming up in Corda called Conclave. So Conclave is a secure piece of hardware for Corda transactions to be verified in a secure and private way. So check out that as well if you're interested. And if you're interested in the use cases and applications of R3 Corda, or some of the permission applications, check out these products: Atlas Elite from us, Contour from HSBC, which we built for them, and Marco Polo from TradeIX, which is operating in the European market, also on trade finance. There's also insurance. We have Midas from us, ClaimShare from ClaimDat, and B3I. On CBDC, I believe that would be quite relevant to our daily lives. We're all concerned with whether our governments are going to launch like digital form of currency using blockchain, or maybe sometimes not with blockchain, right? So check out Project Inthanon that's done by Thailand and Hong Kong, Ubin by Singapore, Canada, UK, Project Dumber by Australia, Malaysia, and Singapore, and South Africa. There's also a lot of CBDC initiatives going on and at different levels, and researching on different sectors of this topic, CBDC. So if you're interested, please check those out as well. And yeah, I think that's all I want to share today.
Okay.
So yeah.
Thank you so much for Tony's present with us. I think Tony and CryptoBlox are really the expertise in providing the DLT enterprise solution. So grab your chance to ask questions, or you can be more engaged in the networking sections. Just get to know Tony more, or you might, if you have any questions, especially related to the DLT enterprise solution or the R3 coder things, so you can just feel free to ask in the sections. Okay, so let us check out if there's any questions from our audience. Okay, so are there chains that is specifically good at DLT, like VET? If so, what make them different?
Well, I have to admit I haven't heard of VET. So I'm not sure whether. Not sure, Tony, can you give more context to the question?
But are there any other chains like specifically good at DLT?
Well, DLT actually is a broader term for blockchain. So actually all blockchains would fall under DLT.
Oh,
yeah. It's like distributed ledger, right? So actually the topic today is also cryptographic ledger. And maybe it also has this concept of decentralized.
Yeah.
So I think it's the same thing.
Yeah, it's okay. I think Tom maybe can elaborate more on this question. So I have one question on hand, would like to ask Tom. So what are some of the biggest challenges for the enterprise to move on to the permissioned DLTs?
Right. So we've been working with banks and insurance companies, and these enterprises tend to move pretty slowly, and they have different IT departments working on different projects. So there's lots of push and pulls between these departments on whether they should use blockchain, DLT, and such. So of course, the political nuances is usually the most troublesome one. There's also the challenge of whether these companies, these enterprises would want to host their own nodes, right? So as I mentioned, in permission chains, enterprises are usually expected to host their own node, but not all of them are ready to do so, right? Because that means that there's more security requirements for the IT departments, and yeah, they might not be comfortable doing that. So right now, actually, many of our customers still operate their DLT applications in a SaaS model, which is not very ideal, but it's a way to start for all these corporates. And for us, we actually, to address this issue, we're trying to make sure that all our products can work in SaaS, and also basically us holding the nodes for them. And we also allow for migrating these nodes onto their own premises later on. So that's like a transition measure for these enterprises to adopt new technology like blockchain.
Okay. Any key requirements or constraints for choosing apply DLT or not apply DLT?
Yeah, for enterprises or actually for any type of DLT applications, you have to look at whether you have a multi-party workflow, right? Because it's solving the issue of trust, and usually you won't trust people outside of your organization, but within the organization, you tend to trust them, right? Unless, like you can also deploy a DLT version of messaging system within the organization. So whenever we chat through WhatsApp, we're putting our messages onto blockchain. That's also possible, but basically you will have to have you have to identify areas that's typically not trusting, and that's where you can apply the concept of DLT.
Okay, I think Tong has elaborate more. So, Fee Cheng, has you have heard of this blog?
Yeah, I think that's from Louis Vuitton, is it? I vaguely remember that.
He said, like, from your experiences, so DLT is better to execute or long execute in the cloud rather than blockchain. DLT is best.
Yeah, I think DLT versus blockchain is really a design difference for these chain technologies, right? So in Ethereum, in Bitcoin, they have these concepts of blocks because you won't want to mine for each transaction. So you kind of package all these transactions into blocks. That kind of speeds up the transactions, and also you increase the transaction per second of the network, right? So for us, we use the term DLT because we're like engineers. We tend to use like the accurate terms. In Corda, it doesn't have the concept of blocks, but in enterprise applications, usually you would expect a lower TPS as well. Because, for example, in trade finance, you won't be having loans every day, right? You probably apply for a loan every 2 months.
Yeah.
So yeah, it's different requirement, and that leads to different designs of the technology itself.
I think let's move on to the networking sections because the schedule is kind of tight for us. So I will now enable the chat room functions. So you might click the chat button to insert chat and start conversation and get to know Tony. You can ask some personal question, I guess, but it's better to be professional if you want to know more about knowledge or issue related to the cryptographic ledger database. Okay, so I will now open the chat. Okay, so just feel free to chat with Tony.
Right. So I have a question from Patrick. How would you handle risk management when it comes to securing the transaction records? Right. So this is a really good question, because in enterprise DLT or in permission DLT, actually those ledgers are in Corda. They're stored in the data centers of the enterprise or the organization. So we actually need to fall back onto the traditional ways of securing this data. So you would expect to have like database backups and recovery and all those availability issues being addressed by the architecture. So really it's the old system approach. It's not as fancy as in Bitcoin and Ethereum, because you don't have that many nodes who would be openly willing to share the transactions to you when you actually lose your data.
Any other? Okay, Rachel. So how to do the planning of architecture in DLT and blockchain? So any references online? Yeah, maybe Tony can provide some online references for that.
Well, actually for R3 Corda and Hyperledger Fabric, I think these two, and also Quorum, these are all backed by some organizations. So Corda is designed by R3, Hyperledger Fabric by IBM, and also some community developers, and Quorum by JP Morgan. So you can expect that these organizations are quite keen to promote their own technology. So there's a lot of architecture references online, especially in their official documentations. Yeah.
Okay, Patrick said facts. But what are the common issues when setting a DLT in the use of the finance field, etc., like stock trade? How can we avoid those issues?
Right. So in finance, if you look at the capital market or like stock, one of the issues would be performance, right? So because permission DLTs tend to be more private and more secure, in a way that they have more validations and overheads to be done to do the validation. And they have less nodes to do the validation, and usually all the nodes would have to validate themselves, basically. So performance is actually an issue for digital currency projects. Typically, permission chains don't perform as good as permissionless chains. So if you look at Solana and Ethereum, probably they all have like better performance than Corda and Hyperledger Fabric. So that's one of the issues. So we tend to also be very blunt to our customers that if you have a use case that requires a highly performant service, then probably permission chain is not the way to go. We will suggest them using chains like Algorand, Solana, and things. Well, and in fact, as far as I know, Algorand, you can also deploy it in a permissioned fashion. And it also has this feature called sidechain, or maybe that's not the correct term, but you can actually link your permissioned Algorand network to the permissionless network. So that's the hybrid way of using these technologies I was mentioning. So actually, many chains that are popping out in recent years are also building something in the permissioned realm. Yeah.
Yeah, I got one question for Tony. Do you think like the government wants to promote the CBDC? Like, I think that's a topic that kindly. So both sides like that have their supporters.
Yeah. So actually, I think most countries would want to go for CBDC, but whether they want to use DLT or blockchain for CBDC, I think that still remains a question, because one concern is like for like the birth of blockchain is from Bitcoin basically, and it's to remove like it's designed to be decentralized and private, but CBDC, well, to be frank, people are discussing how to do anti-money laundering checks and KYC within CBDC, and that's really violating the idea of privacy and to be anonymous on the network. So in fact, I think governments are being pushed to work on CBDC just because there's a unregulated version of a currency like Bitcoin, Ethereum on the market. So they're pushed to also come up with a fiat currency version, a digital version of fiat currency. Sorry.
I think if there's no other way to fix this issue, like government will interrupt. Like,
I think they either like regulate the cryptocurrency market like in China, or they will just come up with their own version of digital currency. But yeah, I don't think DLT would be the best technology to deploy as CBDC, because it just creates so much overhead from a technology perspective. You don't want to check every contract when you transfer, right? You don't want to have like multiple validator nodes running the same validation just to be just to be, I don't know, decentralized. But in fact, all those nodes would be hosted by the government anyways,
yeah.
or somehow controlled by the government. So why not just have one traditional system to do all those validations?
Makes sense. Okay, I think that's all for today's Tony's presentation, and also we have big thanks for Tony answering so much question and get to know our online audiences. So this is the end of part 3 workshops, and we'll take a 10 minutes break. So upcoming section will begins at 5:25 p.m. So let's have a water break and a toilet break now. I guess I have to go for a toilet break now. Okay, let's get back at 5:25.
Okay, thanks, Tim.
Thanks.
Thanks, everyone.
Hello, welcome back to the part 4 of the webinar. So in this section, we'll learn about how the blockchain framework at crypto.com is used to make transactions and reversals. We'll walk you through the system architecture and deep dive in different transactions. We'll also cover the topics of on-chain sequences. So if you have any questions about the content of the workshop, you can just enter it in the Q&A using the Q&A button. And our guests will answer you one by one in the later follow-up sections. Okay, so don't waste time. Let me introduce this part of workshops. So when we talk about cryptographic ledger database, we also think of the application and potential transaction in crypto and DeFi world. So in recent years, crypto payments continue to see increasing growth and demand around the world. Several organizations are now offering crypto payment rewards through various programs and offers. For example, you can see on the right-hand side, the MasterCard recently announced that it will allow partners on its network to enable their consumer to buy, to sell, and hold cryptocurrency using a digital wallet, as well as reward them with digital currencies under loyalty programs. And another example is like Geolancer, an application to collect manually verified point of interest. They collect data on the ground and provide cryptocurrency reward for anyone who collects POIs in their neighborhood. And some facts and figures stating that 37% of Singaporeans were found to be interested or willing to pay with cryptocurrencies. And some countries already try to adopt Bitcoin as legal tender as well. So how can businesses to adapt such new payment gateway, and also what to focus for issues related to the system architecture topics? Let us welcome Jonah, Senior Vice President from Crypto.com, to share with us. Okay, welcome, Jonah.
Hi, everyone. Thanks, HKEBA, for having me. So really excited to be sharing with you guys today some learnings that we've gained over the years at Crypto.com, having built a whole suite of centralized finance products. And only recently have we started to make our foray into DeFi. But so in our DNA, our DNA is very much in the centralized finance world and trying to fit that within the paradigm of cryptocurrencies and blockchain, and trying to really fit traditional finance and centralized finance into like this completely new way of transacting and transferring value from one market participant to another. So really excited to be able to dive into this with you guys today. So just a little bit about me. So that's, of course, that's me, but that's actually also my favorite NFT right there next to me. So that's actually a Chronos chimp. So Chronos is actually something that's very close and dear to my heart, because that's our the latest layer 1 blockchain that Crypto.com recently launched. So the mainnet is actually live right now, and Chronos Chimp is actually one of the first NFT collections on Chronos. So I'm kind of promoting the collection a little bit, trying to get more people to look up Chronos Chimps. But yeah, that's my favorite Chronos Chimp right there. So if you see that chimp anywhere, with an avatar using that picture, it's me. So yeah, a little bit about me. So I'm a former corporate lawyer before getting into tech. That was a long time ago now. I think it's been almost 8 years since I last practiced corporate law. So how I got into tech, I actually taught myself how to code. Before joining Crypto.com, I had around 5 years of software engineering experience after teaching myself how to code. But for the past 3 years, I've been running product at Crypto.com. So my story with crypto started in 2017 when I first jumped on the ICO bandwagon and started, buying a lot of very suspicious IPOs. Needless to say, that didn't end very well. but that got me very hooked into, you know, the prospects of cryptocurrencies and blockchain and what that means for us in the real world. And that's how I joined crypto.com. So my current focus right now is CDeFi. So what that means is centralized and decentralized finance. And how do these two worlds that are very, very different, how do we get them to work with each other? And this fits perfectly within Crypto.com's story, because Crypto.com started off as a CeFi company. But of course, we all know that the world is moving towards a more decentralized narrative. And you know, as a first and foremost centralized finance company, it's in our interest to innovate, but at the same time, you know, as all of you know, there is the innovator's dilemma, where innovating in the short term could mean harming our core business. Innovating in the long term could mean harming our business in the centralized space in the short term. So how do we make that work? The second thing that I'm working on right now is, of course, like I mentioned already, Chronos. So I'm working on actually developing the DeFi ecosystem for Chronos right now. So yeah, I'm in this kind of really good spot where I'm able to see both the centralized finance world develop and how DeFi is also developing, and kind of in this position to merge the two worlds. So that's enough about myself. So like getting straight to the meat of the talk today. So I'll be looking at one specific product on Crypto.com, and that's Crypto.com Pay for Business. So this is actually an e-commerce checkout solution that with merchants actually as the core demographic. So I thought this product would be particularly fitting for this setting, because this is the HKEBA after all. And so, you know, like introducing the audience to how crypto payments are done in the e-commerce world is actually super interesting, because we're looking at a number of challenges, like, so, sorry, I think I'm missing a slide here on, but it's okay, I can talk through it. So the challenges that, you know, we're facing with Crypto.com Pay is that e-commerce merchants expect instant payment, but on the blockchain, in the decentralized world, I think instant transactions are something that is still a lot of projects are trying to figure out how to do. And so from a technical perspective, how do we allow merchants to accept payment, but maintain the same experience that their customers are already used to with traditional payment methods like Visa and MasterCard that processes transactions within like seconds, right? So I'll dive into that today. And first off, I'd like to show you, just to give you an idea, right, what Crypto.com Pay for Business actually does. So it's looking at this product here. You can imagine like a e-commerce shop with a checkout page, and right next to the PayPal button, you would get Crypto.com Pay. And we're already live on over 1,200 merchants around the world, with like notable merchants including Time Magazine, Travala.com, to name a few, right? So with these high profile merchants, we're already processing thousands of transactions a month. So this is what it will look like on a checkout page of, let's say, Time Magazine, right? So fully customizable checkout page. And all you have to do is click on that Crypto.com Pay button, which will then bring up a QR code that you can do two things with. You can either scan it with our Crypto.com wallet. So this is a centralized crypto wallet, right, where you don't own your keys. It's a custodial wallet run by Crypto.com. Or you can actually yeah, so what you do on the app is if you already have an account open on the app and you have funds in your crypto wallet already, you can pay with your crypto wallet on the app, and your funds will essentially get sent off chain to the merchant, right? So this is a traditional, like just traditional system database interaction where we are simply deducting funds from your database record sitting on crypto.com and crediting a merchant off chain on a traditional database. And a merchant at this point will then be able to withdraw the money that you've sent them. Okay, so the second option, right, is then this is actually the more interesting option, is to pay on the blockchain with wallets like MetaMask or Wallet Connect or other non-custodial wallets. So you'll essentially have all of these different options on crypto.com Pay for business. And what a user will do is they'll select MetaMask, for instance. And the user experience here is interesting because we'll then immediately ask the user for their email. Now, this doesn't really jive very well with the decentralized world, because asking people for PII like an email is actually quite frowned upon in the decentralized space. But we actually need this for a number of reasons. The first being, again, this is where the CDeFi angle comes in, right? As a centralized regulated financial services company, we are actually required to do some level of KYC from anyone that pays us on chain. And with crypto being like a high risk kind of payment method, we need something to actually identify this user. And we felt that like when we made this product decision, that asking for an email was better than nothing. Right. And the second reason is we actually need the email in the event that we actually need to do a refund to the customer. And I can go into a little bit about why this is the case. But in summary, it's very difficult to do refunds on a blockchain because a lot of people in crypto right now send funds from wallets that they may not actually have the private keys to. So for example, a lot of people send their funds from like their Binance wallet, right? Where they don't actually own the keys, and that address could actually, no longer exist, or that address could no longer be used by Binance. At which point, if we blindly send a refund back to that wallet, their funds are lost forever. So we want to avoid that. And so the idea here is to get some contact details so that we can ask a customer where we want to send the funds back to in the event we need to do something like a refund. All right, so this is kind of what the payment flow looks like, right? So when a user wants to pay on chain, we'll actually fetch the exchange rate via like a price feed that we have integrated with 10 different crypto exchanges. And we'll actually set the exchange rate and give the user a time period to actually fulfill the transaction within this time limit, right? So at this point, we're actually bearing the risk as a company in the event that the price changes drastically during this countdown period. Right, so then once the user sends the transaction, we'll actually be scanning on the blockchain to check when the funds have arrived. And once we detect the funds have arrived, then we'll actually tell the user their transaction was successful. So, I think everyone in the audience is quite technical. So, I'm going to go into a little bit about the system architecture behind this whole thing and what it looks under the hood. So in the middle there, in this in the middle square, that's kind of where all the magic happens. So we have 5 core components that the Crypto.com Pay infrastructure is made up of. So you can see that here, actually, all 5 of these components are centralized components. Like none of them are smart contracts or blockchain or anything deployed on the blockchain, right? So starting in the middle here, we have the Crypto.com Pay server, which is a traditional web server. It connects to a database and it credits and debits customers and merchants with funds whenever transactions happen. Right? And then we also have a merchant SDK and a merchant API that allows merchants to easily integrate Crypto.com Pay into their checkout page. Finally, we have a Crypto.com app server, which essentially powers the app that you would use if you wanted to pay off-chain with our custodial wallet solution. And finally, on the bottom right there in the square, we have blockchain services, right? Which essentially are our blockchain nodes that connect to all of the different blockchain networks that we support transactions on. So what the blockchain services do is essentially generate on-chain wallet addresses for our merchants, monitor transactions coming in, and also issue refunds on-chain. What the blockchain services also do, and this is quite interesting, right, is if you look at the bottom right here, what we actually do is we try to give our users as much flexibility as possible when choosing the cryptocurrency to pay with. So, and the only way to really do that, right, is to leverage, like to be able to allow users to exchange their cryptocurrencies on the spot when they're making the payment. So we actually integrate with Uniswap and our own decentralized exchange, DeFi Swap, to allow like real-time crypto conversion at the point of sale. So this actually gives users quite a lot of flexibility in what cryptocurrencies they want to use to pay. So just quickly looking at the flow, right, of how funds move. So whenever a merchant on the checkout page actually detects a user wanting to check out something, right, then they'll actually send a request to us on the Crypto.com Pay server. We will actually then show the customer their payment page through a little pop-up in our SDK. And then what the customer then will do is pick the payment method that they want to use. So whether it's on-chain or off-chain, they can pick it via the pop-up that we show them. And they'll select the cryptocurrency that they want to pay with. It's at this point that we will either swap the cryptocurrency for the user automatically behind the scenes, or if the user already has the crypto in their wallet, right, then we'll just initiate the transfer on the spot. And then finally, what we'll do is once the crypto hits our account, we will actually convert the crypto to a stable coin for the merchant on the spot to lock in the value for the merchant. Yeah, most merchants actually prefer us to swap it to stable coin immediately. There are some crypto native merchants that prefer to hold Bitcoin and prefer to hold like Ethereum, but that's definitely not the norm. So let me go into the blockchain services a little bit. So how we track and monitor blockchain transactions coming in, it's a pretty intensive operation here. So if you start at the left here with the customer, if they want to pay a merchant on chain, we actually on the spot generate a Ethereum wallet address or a Bitcoin wallet address on the fly. And we'll actually show the user the address via the QR code immediately. So this happens on the spot. And what happens is then our blockchain service monitors transactions going into this, what we call a throwaway blockchain address. Once the funds hit the throwaway address, we'll then have the blockchain service actually initiate an on-chain transaction to sweep the funds into a centralized treasury account where we collect funds from all merchants. right? So the key here really is our blockchain service generating these throwaway addresses every time someone wants to pay. So I'll go into some of the downsides of this approach later. So yeah, challenges, right? Of course, there are limitations to the approach here. So in e-commerce, consumer expectations are instant checkout. So how well does this fit into the Bitcoin and Ethereum paradigm, right? And we can say with a lot of confidence that it doesn't really fit that well. So the best way to really deal with this is to just make do with what we have, right? So the best practice usually is to wait at the very minimum for a minimum of 3 confirmations on proof of work chains like Bitcoin and Ethereum, right? So what this means is, as someone who is expecting a transaction to come in, what you would do is you would actually stare at the Bitcoin blockchain or Ethereum blockchain and make sure that this transaction is included for at least 3 of the next blocks that get added to the blockchain, right? So at that point, what we can be very confident about is that this transaction really is final and that the transaction won't be disputed at a later point in time by the Bitcoin network or the Ethereum network, right? So where's the challenge here? So on the Bitcoin network, average block time is around 10 minutes. So if we had to wait 3 confirmations, one transaction would take around 30 minutes before we can confirm it as final. And on Ethereum, 6 blocks is recommended, which would take on average, that's not 90 minutes. It would take on average 90 seconds. Sorry, typo in the slide there. And so like crypto markets are super volatile, right? And, in 30 minutes or 90 seconds, like the price and the condition of the market could change very, very quickly. So there is a risk of like the exchange rate slipping while we're waiting for block confirmations. And who bears the risk here? Do we bear it as the payment processor, or should the merchants bear it? Right. So these are all like very difficult questions to answer. So the solution, right, is we've actually decided to make a very tough decision to reduce the minimum confirmation requirements. So and we actually take on the risk in exchange for less user anxiety and a better end user consumer experience. Right. So what we've done is we've actually reduced the confirmations on the Bitcoin network to only 1 confirmation, and on Ethereum only two confirmations. Right. So on Bitcoin, it's still not ideal because 1 confirmation still takes around 10 minutes. So what we've actually done is gone 1 step further with Bitcoin, and we've gone into what we're doing now is we're actually looking at what we call the mempool, which is kind of like temporary cash that holds transactions that are pending confirmation, that are pending being added to a block, right? So what we've done is we've gone 1 step further to look into the mempool to actually see what transactions are about to be added to the blockchain. And even before it gets confirmed, we'll already show the user in the pop-up that we've detected your transaction. It just hasn't been confirmed yet, to create a better user experience, to tell the consumer, we see the transaction, it just hasn't come through yet. So just wait another 10 minutes and you should be good to go, right? So those are some of the things that we've done on the blockchain to help create like as close as possible to a traditional e-commerce checkout experience. So second challenge, right? Generating throwaway addresses is very, very expensive. And so why are we doing this instead of a dedicated merchant address? Like I kind of alluded to this already. And simply put, throwaway addresses allow us to have 100% certainty in mapping a purchase to a particular checkout in a deterministic way. So yeah, so this avoids complications where there may be like multiple checkouts happening at the same time for a merchant. And if we only had 1 dedicated address per merchant, we might not be able to actually check which incoming deposit is belongs to which customer, right? So the downside of this approach is that it's expensive because addresses need to be pre-funded in order for us to pay for gas, and gas is required for every single blockchain transaction. So on Bitcoin and Ethereum, they're very gas intensive blockchains. So this sweeping kind of like sweeping action that we do, right, for every single transaction, the cost adds up because every single time we sweep a transaction, we have to pay a little bit of gas. And right now the gas cost is, could run us up to $30 to $40 per transaction. So it's a cost that as a company we're bearing right now. But in the long run, we're definitely looking for less gas intensive blockchains to integrate with. So more solutions, right? Is yeah, exactly. So I kind of already alluded to some of them. But what we're also looking into is to deploy like a multi-party custodial solution, what we call MPC solution, such as Fireblocks gas station. And I'm not going to go into MPC here because it's a topic that can be saved for a whole separate other seminar. But suffice to say, like the point with MPC is that it's much easier to create pre-funded addresses and to be able to do sweeping at a much lower cost. So finally, like one big challenge that we've had trying to build an on-chain payment processing solution is subscriptions are very, very difficult. And as you all know, like those of you who've used, like solutions like Stripe or Braintree, right? One of the big value propositions for these solutions is they make subscriptions super easy. Like it's almost like a set it and forget it kind of, and that's the kind of experience you want to achieve for the consumers, right? And Stripe makes it super easy. Braintree makes it super easy. So how do we do this on chain? So this actually, subscriptions actually don't really fit very well into the blockchain model, right? Because blockchain by definition requires every single person that's initiating a transaction to sign that transaction and to take that action to actually, use their private keys to tell the blockchain network that this really is me that's trying to send the transaction, right? Now, how do we do this, right? With MasterCard and Visa, that's possible because all you need to do is you need to tell MasterCard and Visa in advance that I really am authorizing this merchant. So just store it on your database and just, I don't know, run some scheduled job, right? To charge my card at a regular like monthly interval. On the blockchain, this is not possible. So what we're doing right now with Crypto.com Pay to support subscriptions is that subscriptions are only available off-chain via our custodial wallet app. Right, so Time Magazine is actually using this subscription feature right now, but they're already asking us, how do we support on-chain subscriptions, right? And so what we've started to look at is streaming on the blockchain. So streams on the blockchain are a relatively new kind of like concept, and I'd like to share a little bit with you about, the potential of streams. Right, so a little bit about programmable streams. What are they? Right, so taking a step back, like I think looking at blockchain development today, it really reminds me of, when I first started. Well, no, actually not when I first started. Maybe like, web development from, over 8-9 years ago when. The typical like communication model between a web client and a web server was the request and response, like HTTP response between a client and a server, right? I think like WebSockets changed everything on Web 2. Like it allowed developers to create scalable real-time experiences without constantly having to pull their servers, right? And so WebSockets really allowed us to create like all these new types of user experiences, new types of products, and without relying on that traditional paradigm of a request response model, right? So programmable streams are actually the new like thing on blockchain that aim to achieve a similar paradigm shift. So like Superfluid is one of the projects that we're looking into integrating right now into Crypto.com Pay. And it's a smart contract framework on Ethereum, and it allows you to move assets on chain via these like kind of things called agreements. And so Superfluid is actually enabling real-time money streaming. So think about, right now, like when you're on YouTube and you're watching a YouTube video, like YouTube actually sends you chunks of the video one at a time, right? And buffers the video for you. Superfluid aims to do the same thing. Superfluid aims to stream money from the sender to the recipient. Then doing this all over the blockchain. So like how they do it is Superfluid actually wraps existing assets like a USDC into like what they call super assets. So the action of wrapping actually kind of creates this additional programming interface around the underlying asset so that they can be streamed on chain. And how the streaming works is Superfluid's actually created a completely new Ethereum standard to allow user to only pay for gas once, but then for the stream to constantly happen per block. So like, here's just a look at how easy it is to actually get started with Superfluid, right? So essentially like what you're looking at here is a JavaScript SDK code snippet, and users are able to, developers are able to just define a user and with their wallet address instantiated, and all you have to do is actually by calling this like flow method on the bottom left here, all you're doing is like you're flowing a set number of cryptocurrency from the sender to the recipient at a monthly interval, right? So Superfluid will automatically actually divide up all your transactions, the monthly transaction, into what it would take per block to stream. And yeah, in this case, Alice will actually be streaming some funds to Carol in this case, and Carol would actually see a real-time kind of update of her balance on chain. So like this is perfect for things like subscriptions, right? Because now users really can set it and forget it, and they don't have to worry about coming back every month to pay for their monthly subscription anymore. Right. So, yep. That's it for me. Just some sharings for me. So thanks for having me.
Okay, so let's enter the Q&A sessions. I saw some questions, but let me warm up this session first. Okay, I want to ask Jonah, what are some challenges when trying to build like CeFi or DeFi products when you versus building purely on-chain protocols?
Yeah, so I think with on-chain protocols, you don't have to worry about compliance or anything legal related at all. I think right now the decentralized space DeFi world is completely unregulated. And I mean, it's only a matter of time before regulators catch up. But I think that's the main difference, is that you really have one less big thing to worry about. So, I mean, of course, in addition to the practicalities, right? Like I think building CeFi products in a way is a lot more forgiving, because transactions can easily be rolled back. It's not very difficult to push changes on the fly to centralized software, right? So like if you discover a bug in your centralized server, it's very easy to just push an update quickly to resolve the issue, right? On chain, it's not the same. Yeah.
So let's look at some audience questions. Okay, where do I buy Chronos chip?
Oh yeah, great question. Chronos chip. So the easiest
Okay, that's
way.
not an advertisement. Just to disclaim about it. Okay, so that you can continue.
The easiest way to buy a Chronos chip or any NFT on Chronos for that matter is by opening a crypto.com account. That's the most secure way to bridge your funds onto Chronos. And once your funds are on Chronos, you can actually just open up your MetaMask and point your MetaMask to the Chronos sort of RPC endpoint, and you'll be able to see your funds there. Then you can, we actually have a whole catalog of all the different dApps available on Chronos. So once your funds are on Chronos, yeah, it's your playground. You can do whatever you want, and Chronos chimps will be there waiting for you.
Can I pay by cryptos but accept refunds in fiat?
So this is something that we don't currently support, but I think it's a very interesting solution, a very interesting idea, because if you're using the custodial wallet, which is the off-chain solution, right? Yeah, like this could make sense for a lot of consumers out there, especially if they're already looking to cash out some of their crypto. Yeah, so.
Okay, will crypto.com consider switching to minimize the gas fee?
Yeah, so definitely. Like I think right now a lot of people are giving Bitcoin and Ethereum a lot of grief, and people are people are saying all these other blockchains are going to come and take over, right? Like Solana is going to take over. It's an Ethereum killer. AVAX is an Ethereum killer. And I think I'm not sure about that narrative, but I think we as a business will need to adapt and actually, adopt faster, more gas efficient chains. So like from a payment perspective, like actually Chronos is something that we're looking to integrate onto crypto.com Pay. Chronos has an average block time of around 5 seconds, and it's super gas efficient as well. So yeah, payments was definitely one of the main use cases for us when we built Chronos. So yeah, that would be the first candidate, and then probably Solana being a second one.
Okay. How do you cater for risk factors that are common to fiat currency payment gateways like chargebacks, fraud, etc.?
Yeah. So that's a great question. And so like the thing is, there are two separate like I guess sub topics here, right? So on the on-chain world, if something gets sent through via the blockchain, chargebacks are by definition like impossible, because the only way to say that a transaction really did happen from a particular person on the blockchain is that they signed the transaction with their private key, right? So there's no way, it just doesn't, the whole concept of chargeback just doesn't fit into on-chain. But then the interesting thing is, as a company, we do have to worry still about chargebacks, because there's the off-chain portion, right? So for instance, if a customer is claiming that they had their account hacked on crypto.com and somebody went and spent all of their money on some like, I don't know, online shop using their crypto.com account, like that's something we do have to worry about. So in this case, like we do have like this chargeback and dispute process that users can go through in case they're claiming that their account was taken over, right? So yeah, like essentially we have the exact same processes that like MasterCard and Visa has whenever we have these disputes. It's not fun, I'm telling you. Yeah.
Okay. I want to like revise this question. What do you think? I think what do you think the general environment, and also crypto.com will help consumers like adopt cryptos as more common payment method.
So what are we doing okay. So we're doing a lot. So I think from our perspective, actually, there are two angles to it: helping people spend their crypto and helping merchants accept crypto, right? It's a virtuous cycle. The more you have on one side, the more likely the other side is going to also increase, right? So we have a like a merchant acquisition strategy. We're very aggressive in like helping to in increasing our pipeline. So that's a very like intensive B2B sales process. But on the consumer side, we're doing a lot to just raise awareness about crypto.com in general, right? So we've had some really high profile kind of partnerships with really big names. I think recently the biggest one in the news is probably us renaming the Staples Center. So right. Like the LA Lakers. Yeah. LA fan. Yeah. Okay. So we're doing that a lot. So marketing is a big thing for us. And recently we've actually started to get major adoption of our Visa cards as well. So like we're just kind of making it really, really accessible for consumers and making it really like attractive to use, right? Yeah. So it's kind of a two-sided process.
Okay, one more question before we enter the networking section. So what are the main differences when building traditional Web2 product versus Web3, or how does it look in your day-to-day?
So I think I already kind of alluded to the Web2 versus Web3 a little bit, but I can go into like my day-to-day, I guess. So day-to-day, I switch between the CeFi and the DeFi world quite a lot, and it's a pretty difficult context switch, right? So in the CeFi world, you're dealing with legal and compliance, you're dealing with like cybersecurity, and you're you know, like, so this is all very traditional software development, right? And then all of a sudden, like when you're looking at the DeFi stuff, it's less so about technical knowledge and going through processes, and all of a sudden much more about applying creativity and your knowledge, whatever knowledge you have on a wide variety of disciplines, like, you know, economics, game theory, like, of course, like your engineering, software engineering experience, and financial modeling comes into it. So it's a very, very different world, developing products on the decentralized space. So yeah, that's, I don't know how I would sum it up.
You sum up quite good. Make it. Okay, let's move on to the networking sections. So I will now enable the check functions. So if you are interested to get to know more about Joner personally, or you want to ask more questions related to today's webinar topics, so you can click the chat button to insert your chat and start conversation with Joner. So yeah, let's see if there's any audience. Okay, Patrick, what are the difficulties for crypto payment to scale up in e-commerce?
What are the difficulties? Yeah, so I kind of went into some of those earlier, but you know, to sum it up, yeah, like I think the mainstream blockchains right now, Bitcoin, Ethereum, just aren't ready for e-commerce use cases. So that would be the main challenge. It's kind of chicken and egg, right? Like there's most liquidity on these big blockchains, and the most visibility for consumers. So they have most trust in these more established blockchains, but at the same time, the technology isn't good enough for them to actually use it for e-commerce payments, right? So what do you do? Right? So I think that's like a key challenge for us. Yeah.
What are some of the notable projects you saw that can help with real-time payment settlements?
Yeah. So there's two ways to look at this. I think Sid went into Solana a lot, right? So I think L1s like Solana are very interesting because they're really super gas efficient, but at the same time, they are, you could actually consider them as more centralized. So what's the trade-off here? What do you prioritize? Do you prioritize decentralization and security over scalability, or vice versa, right? So that's a big question. But I think on the other side, like you have, like layer twos, right? Like Polygon is a really good one right now. You also have a bunch of other Ethereum layer twos like Arbitrum and Optimism right now. So like all of these layer twos also can play a big part in scaling crypto payments. So I think these are all things that we're looking at right now.
Okay. How do I integrate payment gateway APIs as an e-commerce merchant?
How do I integrate payment gateway APIs? So I'm assuming that the question is about like, is it geared towards, okay, I get, so for traditional payment gateways, right? Like I think there are a lot of solutions out there. Stripe, Braintree, even PayPal are very good payment gateways. The downside to those payment gateway solutions is because you have to worry about chargebacks, worry about refunds. They usually do enforce kind of like what they call I think it's a reserve that every merchant has to have like on their account. Mm-hmm. So if you want to process like, I don't know, $10,000 worth of transactions, you need to have at least $3,000 already sitting in your account in case chargebacks happen, right? So that's the downside to the traditional payment gateways. But with crypto.com, right? It's super easy. We have a merchant SDK. It's like, I think it's a copy and paste setup. So all you have to do is sign up for an account, get your business verified, which takes 3 to 4 days, and then all you have to do is copy and paste a code snippet, and that's it.
Easy migration.
Yeah.
Okay. From your statistics, which countries have highest transaction, and also will CBDC speed up the popularity?
Which countries have highest transaction? So we have the most adoption right now in Europe and the US. I think my hypothesis there is because merchants in the US and Europe are actually most ready to adopt crypto payments. So a lot of them, like they're very open to the idea, and therefore I think it's then easier for consumers to pay with crypto in those countries. Mm-hmm. Right? So I think it's only a matter of time before the rest of the world catches up.
What's the settlement or paid out lead time of crypto.com?
The settlement payout lead time. Oh, okay. Settlement is instant. So the moment we receive the crypto, we convert it to stable coin and we credit you with the stable coin immediately. And you can actually request for payouts anytime, right? So it's not like a traditional credit card gateway where your funds may get locked up for up to a month before they get released to you. In terms of payouts, how long it takes, it really depends on which bank you're using and how many, like what the routing looks like for those funds. So on average, I would say merchants will probably get their funds within 3 to 4 business days after requesting a payout.
Jack, anything that I need to prepare firstly if I want to start for crypto payment?
So the easiest way to do this is if your shop is already on Shopify or WordPress. So if you have a WordPress shop or a Magento shop, we already have plugins available. All you need to do is like go to the WordPress or Magento plugin and look for Crypto.com Pay, and it's a one-click setup. And then for Shopify, we are actually working on a partnership with them right now to get our plugin onto their platform as well. So once that's done, then I think we've pretty much got the entire e-commerce market covered.
I think all the packages and plugin you mentioned is quite it's quite attractive for some of our audience. So yeah, please so please feel free to drop any comments, or if you want to further inquire Jonah, just email to us at info@HKED.
Yep, definitely.
Yeah, and we'll refer it back to Jonah. Okay, great.
Thank you. I'm glad you enjoyed it.
Okay, if we don't any audiences would like to connect with Jonah, if no, we'll move on to let's the end of the breakout section, I guess. Yeah, thank you so much.
Cool, thank you so much, guys.
Okay, we'll now move the setting a little bit, so please wait for us, and we will then enter the summary section, and also please fill the feedback survey for us. Thank you. Hello audience. So thank you for being with us from 12 p.m. to 6 p.m. So we hope you all enjoy this webinar, the Cryptographic Ledger Database, Analysis and Application in Decentralized Blockchain in the Financial World. So we have several speakers to share with us their experiences and also insight related to this topic today. So I will do a brief summaries on what are these speakers tap on the topics, and they will also share some of their ideas on how this kind of knowledge gonna benefit to all of you. Okay, so the following ideas and points are contribute from four of our four speakers. So hopefully you might understand more about how this kind of contents benefits to you on the cryptographic ledger database technology. So first, from Kendrick, the Chief Technology Officer from DFX Finance, our first speaker, he mentioned that DeFi has been growing exponentially in the last few years, and Ethereum has been at the heart of it. Ethereum is a dark forest, a highly adversarial environment. So this webinar, he eager to let you know how to not get wrecked trading on Ethereum. For our second speaker, Sid from Siam Intelligence Technology, a professional technology lead, he mentioned that we have to take a closer look at the Solana ecosystem and its smart contract infrastructure. The future of web is going to be decentralized. For first speaker, Tony, he talks about a lot about permissioned DLT enterprise solution. So he's saying that permissioned DLT is more easily to adopt by enterprises, given its privacy and control. Multiple players in the software industry has developed solution on its technology. Different players or role like enterprises, IT consulting firms, cloud providers, etc. So for our final speaker, Jonah, just finished his presentation. He mentioned that cryptocurrency has long been touted as a borderless instant payment method for e-commerce, but it's not without its technical challenges. So through this webinar, we have had an overview of some of the key challenges we face in the developing in crypto.com, a checkout solution for e-commerce merchants, and then dive into some practical solution to this kind of challenges. So I will once again summarize a bit. So in the four workshops, we have tapped on topics like what is AMM, what is MEV, what is front running, back running, and sandwich, how to protect your bot when you're doing some DeFi trading. And we will look at the arbitrage relationship of different curves, how to prevent slippage and some prevent trading loss when you are doing such trading in DeFi. Our second speaker, Sid, talks about a lot about Solana's background, and also if you want to, or if you're eager to develop or do some coding on the basis of Solana environment, how you can do it. He provides us a demo section by using a blackjack game on Solana to perform how you can do the coding in Solana environment. For our first speaker, Tony, he talks about permissioned DLT. If you're interested, please inquire Tony for such solution. Their company and himself is an expertise in providing permissioned DLT enterprise solutions. It's more about privacy, control, and also security. So for our final speaker, Jonah mentions a lot about how to mixing cryptocurrency with the e-commerce trend, as e-commerce growing very mature in the world, but cryptocurrency is also a hot trend coming up very, very fast recent year. So how can these two concepts be merged and mix and match in recent year? His company Crypto.com provides a lot of solutions on that kind of topics. So we hope you learn a lot about Cryptographic Ledger Database in this webinar. And once again, we want to emphasize that this webinar is to equip all ICT professionals of Hong Kong. We hope to enhance your competitiveness and also your knowledge and understanding on the Cryptographic Ledger Database. This webinar is not emphasized on any financial advices or also investment advices. So we hope you enjoy today's webinar. We hope you have a fruitful experience with us. And move on to the upcoming events. Please help us to fill in the feedback form. You will see a clickable link direct you to the feedback form, or you may scan the QR code to fill in the survey. And we will check out your comments and opinions. And certainly your opinions help us to do better, no matter on content or rundown or arrangement in the upcoming events of HKEBA.